Welcome to the UK Technology Investor Showcase. My name is Steve Torso. I'm the founder and managing director of Wholesale Investor, and I'd like to welcome you all to today's session. The why behind this event is that obviously the UK is a hotbed of technology, of innovation, and also of talent. Everything about Wholesale Investor is how we bring together innovation, capital, and also opportunity. And this event is really about providing high net worth, professional investment groups with access to unique and innovative companies that you can engage with, that you can invest in, and that you can also be strategic with. We've been very lucky that we've worked with now 8 companies which have gone on to become unicorns. We've worked with over 63 companies that have actually gone through exits via IPO, merger and acquisition. And we've worked with dozens and dozens and dozens of companies that have done 5x and 10x results. Our ambition for this event is to really provide this access and to make sure that innovation is global, to provide opportunities for UK investors as well as international investors as well, because with such great talent and such great innovation coming out of the UK, obviously there's acceleration in your home market, but also what that leads to is a platform for growth in international markets as well. So this conference is about providing with that platform, with that access, and with that visibility to the companies that have been featured at today's showcase. Today, as presenting companies, we have Entelechy Academy, Sensate by BioSelf Technology, Make to Rent, Tamboran Resources Limited, LifeArt, Rewire Holdings, JAVIS Holdings, Madara Invest, Toodle, WaveTech, Nexus Digital Technology, and Plain Characters. As a keynote speaker today, we have Francesco, who's the managing partner at Silicon Roundabout Ventures, one of the leading platforms for founders in the UK and right throughout Europe. You'll also hear a panel session focused around venture investment in a post-COVID world. Our panelists include Paulina Bielek, head and founder at Expara Vertec Global Accelerator and president of Lotus League Foundation. Paul Webster, managing director and CEO of International Investment Services. Olga Afanasyev, who's the head of Kiev branch office at LX. John Vasil, director of Inward Investment at Flanders Investment and Trade. Now, we know how important a simplified and streamlined process for you to get access to the opportunities. You can do this via our Crisp platform. Now, on the stream page that you're watching this, you can easily get access to the companies via the links on the right-hand side. Now, everything we have done, as I said, is to streamline and simplify your experience. Sit back, grab a coffee, and enjoy our UK Technology Investor Showcase. Thank you.
Our first keynote speaker today is Francesco Perticarari, Managing Partner of Silicon Roundabout Ventures. Francesco will be discussing the record money that's come into the UK startup ecosystem from US investors this year.
Hi everyone, and thank you for tuning in. My name is Francesco, and I'm delighted to be here at this amazing event. And thank you so much to Steve and Lee and all the people at Wholesale Investor, Martha and Nadine. So thank you so much, guys. And it's a pleasure, it's an honor to be here. And today we're going to talk about why did US investors pour record money into the UK startup ecosystem this year. And by starting with this reflection and trying to answer that question, we'll actually see how the UK ecosystem has developed, what it is today, and where it's going. So, without any further ado, let me shrink my big head here into something more realistic, and let's start. About me, why am I even here? Who am I? Francesco Perticarari, who is this guy? So I'm the co-founder of the Silicon Roundabout Tech Community and the managing partner of Silicon Roundabout Ventures, a high technology pre-seed seed venture fund. Just to give you a couple of examples, for instance, we've just invested in a cloud, edge cloud computing startup, a robotic process automation startups, IoT startups. This is the kind of companies we invest in. But I'm not the typical venture capitalist. In fact, I'm a computer scientist, a programmer who's been building technology and to an extent still do for the last 10 years. And throughout this decade, I've actually been growing a meetup, that Silicon Roundabout, that surprisingly took almost like a life of its own. And I'm just going to tell you a little story about this that has actually quite a lot of relevance for you to understand where am I sitting, where I'm sitting in the UK ecosystem and why it matters. So here's the story goes. In 2011, we started this meetup, the Silicon Roundabout meetup. And with the story of this meetup, we've actually got to see how the UK ecosystem itself grew. So look at this funny picture and where we were back then. And at the time, if you looked at the previous decade up until that point, there were only 2 tech unicorns that surfaced over this decade period. And if you fast forward to 2018, in the decade trailing 2018, you would actually notice that as much as we had ballooned to become the largest tech meetup community in Europe, the UK ecosystem had now produced 31 tech unicorns. And after 2018, if you look at 2019 and 20, bear in mind 2020, the year of COVID, you would have noticed another 13 unicorns, which is a 40% increase from the 31 of the decade before. So, a year alone, 8 new unicorns, and then another 3 in 2020. So that's how actually we started this venture fund, because we noticed that there was this growing ecosystem and that we just happened to be at the very core of it with this meetup, with all entrepreneurs flowing through our community. And so as we grew our community out of passion, the UK ecosystem itself developed. And in a way, we're very blessed to be right at the epicenter of this growth. But what fueled the growth of the UK tech community? Long story short, money. But you might wonder, is the UK even on the global VC map? I mean, yeah, great, a bunch of unicorns in the UK ecosystem, but isn't VC all about Silicon Valley? Well, the truth is that the UK ranked 3rd in terms of investment last year in venture capital alone. So that's basically the UK, tiny little country up there, like at the top of Europe, that little island up there, ranked 3rd with nearly $15 billion of investment. That alone is actually bigger than Germany and France combined. And if you think about the size of population and GDP, if you're familiar with that, Germany and France are actually, one slightly bigger and the other one similar size to the UK. So the fact that the ecosystem is so much bigger and advanced gives you an idea of how much the UK is itself leading. On top of that, Europe is growing overall. And if you combine all these countries, you actually start to get into China level, which of course is not yet the US level, but it's growing and it's growing fast. And if you look at, for example, high technology, the UK is speeding up even faster. For example, in what is called deep tech, so, industry 2.0, advanced technology investments, the UK is speeding up its growth even faster than the rest of Europe, which in itself is outpacing US and Asia, at least in recent years. And then someone might ask, especially if not local, wasn't Brexit going to kill the UK? What happened, over the last 5 years now? Well, the answer is straightforward. Not really. If you look at all the years since 2016, not only the UK domestic market has been injecting more and more money into the ecosystem has produced more unicorn, more exits overall. Also, foreign capital has been coming into the UK. And here is why I started the presentation with reference to the US investor. You'd actually see that if you look at capital coming into the ecosystem, Europe and the US, the rest of Europe and the US are investing in UK startups. And the US alone are actually loving the UK ecosystem. They're investing especially in larger deals, but crucially, because they started years ago, in recent times, started to also find their own slice of the cake in earlier deals. And you would have seen, for instance, if you were familiar with the ecosystem, that Sequoia opened an office here in London. They're now based here as well. So there is definitely a long-term attention to the ecosystem. It's not just that for a couple of years there were a couple of good deals and opportunistically someone invested. No, this is a pattern. There is growth. It's continuing and it's here to stay. And 2021, it's on the same path. No sign of a slowdown. Over £5 billion invested, which in dollar, of course, is even higher, and over 600 deals. So again, continuous growth. So what's actually happened in the last 5 years? If Brexit didn't crumble the ecosystem, didn't crush the ecosystem, what's happening here? And what does it matter to investors? So I'm going to just give you a couple of points of reflection and let's see if we can piece them together. So we've noticed, for instance, again, from our perspective from Silicon Roundabout, that a lot of companies that were raising funds also managed to raise, especially the more high-tech ones, which are the ones we really focus on, they were able to secure grants. So I looked up at the statistics, and it turns out that over 1,000 companies received last year over 1,300 grants, of larger grants over 100,000. If you look at smaller grants, the number goes even higher. Most of them from the UK body dedicated to that, Innovate UK. Then, for example, when COVID happened, we've seen a massively rapid response from the British Business Bank, deploying over $1 billion worth of convertible loans to companies in partnership with VCs. The scheme was a match funding exercise, so it was very much in a government together with the local sector type of effort. And then there is the global war of talent. So if you put the UK in the worldwide map, not only we've seen a growth in its ecosystem in terms of capital, but also entrepreneurs are telling us that they love the UK for the access to talent and for the access to capital, which is interesting because even though it's not as big as a market in terms of quantity of money than, let's say, the US, perhaps because the ecosystem is so concentrated and everything is happening across the board very fast, and it's an ecosystem you can actually travel across. It's not like, for example, New York to San Francisco very quickly. The ecosystem tends to be easy, or at least according to entrepreneurs, easier to navigate than let's say larger ecosystem. So you've got this combination of talent, you've got this combination of UK government bent on supporting the ecosystem, and so entrepreneurship is flourishing, venture capital is flourishing, and the spirit is very much probably the opposite of what you might think of Brexit, right? In terms of division, the ecosystem is open to Europe, is open to the US, and internally is open to talent, and the pace is increasing. So no, ultimately Brexit did not matter to VC, and if you look at the growth from 2016 to 2020, the UK has actually outpaced the rest of Europe. So definitely not a big impact in terms of capital coming in, and definitely not an impact in terms of the outcome that we've seen from the industry, which makes sense if you think about it, right? If you're in venture capital, you're not necessarily trading goods across border with one or two countries. You're aiming to be a worldwide leader. That's why in Europe we all use don't use Google most of the time, mostly Brave and DuckDuckGo, but most of us use Google and of course social network from the US, etc. So tech is, so to speak, without border. No reason why even the potential complications that might have might have come up from Brexit should impact this type of industry. So if that's what happened until now, where are we heading to? So I've got 3 points of reflection here. One, what happens if a crisis comes? And I mean a real one, because COVID, from a financial perspective, wasn't really a crisis. And by financial, I mean public and private markets. Because yes, there's been disruption, and yes, from a humanitarian perspective, it's still a crisis now. I mean, we can't deny the massive devastation that is coming out of COVID. But if you look at the public market or the private equity market, for that matter, it was a blip. And in fact, it's been, since then, the markets have been growing, both private and public. So if you look at venture capital, And we zoom out from the UK and we look at what happened worldwide since, let's say, the last financial crisis, 2007 and 8. And then 2009, we've seen a slow reduction in number of deals and aggregated value, but pretty much staying stable realistically, and then growing back up. And then if we zoom even sort of further out, let's focus on the US, because before that, let's say, the last 10, 20 years, really the US market was the only real VC market, right? That all the way through the 80s and 90s. So capital deployment going up, then the dot-com bubble crashes down, but, sort of finds a space again. And if you ignore that very light rush of bubbling, that really like completely outpace for just a single year the rest, and you take out the rest of the trend and you take out that part, you actually notice that the ecosystem has pretty much been, yes, going up and down and then recovering, but not necessarily experiencing tremendous crashes. I mean, even in 2008, you can see the market going down and recovering within 12 months. Today, we're not at the heights seen in the dot-com bubble, and definitely you can see that the ecosystem has been growing more consistently, not necessarily with a jump in a single year. Then there are other points within this crisis that we can look at to try and predict what's going to happen should a crisis arise, is the fact that since the post-financial crisis in 2008, 7 and 8, the value of deals have been going up, the number of deals have been going up, and then recently it's actually been tapering down. So it's not just exploding on every single company is receiving lots of money, but capital has been going more towards the later stages and concentrating into larger deals. The number of deals have reached a certain point and it's kind of stabilized around that, going slightly down. I think last year has actually gone a bit up. And now we're talking worldwide. And in terms of returns, we can see the venture capital funds have been performing again globally pretty well overall. If you ignore, say, for example, a blip again in 2008 and then going slightly down in 2016. But overall, crisis didn't massively crash markets for more than, let's say, a 12-month period. And again, looking at data, where is the UK ecosystem? Where is Europe? Because it's within Europe, right? Within the global ecosystem today, we see that Europe is still far away in terms of capital deployment from, let's say, North America, and still catching up to Asia. Also, if you look at capital deployed compared relative to the GDP and population, Europe is way behind. And whilst the UK is probably the most prominent member together with perhaps the Nordics, but their ecosystem is way smaller than the rest of Europe, the reality is that there is still a lot of disproportion if you look at capital deployed per GDP or population. And so here is my answer to what if there were a crisis within the next 5 years. Well, it's hard to predict what a public market crash would imply, but possibly a crash on later stage mega deals that are now hitting public level valuation. Potentially, I don't exclude that, because at the end of the day, the two markets are very much entwined. Probably an intake capital slowdown because fear of missing out on the bullish side, and of course, fear, uncertainty, doubt on the bearish side always rule the market. So if there is a crisis, we would probably see, if there were to be a crisis, we'd probably see capital raise to be slightly harder for at least 12 to 14 months. But most likely not a fundamental big deal for the UK and Europe, since the area is still young compared to the US or even Asia. And definitely, if, in my opinion, not a big deal of difference for early stage investors and early stage companies, because as long as they're well capitalized for 12, 24 months down the line, we will probably see a market pick up, just like after every crisis. And by the time that happens, early stage deals that have an horizon of 8 to 12 years, there should be a fairly reasonable pickup again of the market. If you ask me, if when this crisis might hit, maybe 1, maybe 2 years, maybe 3 years. And I would say that probably the place I wouldn't want to be if that crisis were to hit is in the pre-IPO mega deals. Everything else in venture capital, as long as the company is solid or the VC's got a good deployment strategy, should be fairly reasonably safe. Not all venture deals are created equals. Again, looking back at the chart I've shown before, we can see that the global investment has been going up for the last decade, whilst the number of deals kind of tapered down after an increase. And in the UK, it's happened pretty much the same. Just like globally, we've seen the size of tickets at growth stage and late stage going up, whilst the number of deals going down, especially at early stage. And like Marcin Zaba from Syndicate Room correctly said, institutional investors are moving progressively to even larger deals, and that implies that there is a little bit of an equity gap at an earlier stage. So we're seeing VCs maturing within the ecosystem. They get more track record. They can raise from more institutional pots of money, especially from US and even Asian investors, and therefore they climb up the ladder because they need to deploy bigger and bigger pots of money. Whilst, especially for the UK, the average angel ticket is still not that big, and therefore there is a little bit of an equity gap. From Series A on, market's super competitive, and it's probably in the pre-Series A that there is still space for the ecosystem to grow faster than, let's say, the ecosystem overall. Also, if you look at distribution, London is still pretty much the primary center for the UK investment, but other centers are catching up. And therefore, I would say that the UK ecosystem players are opening up the deals across the country, but London still reigns supreme. And I also see this equity gap actually creating an opportunity over the next 5 years, just before the Series A, because there needs to be some leveling up. And London is actually offering something big, something to take IPO. So if you look at the next 5 years, let's see where London sits in terms of the after the startup stage. And to perhaps surprisingly even to me, I've noticed that the market is giving good results. Again, we're in early phases. We've seen Deliveroo performing not that great, but still being able to open conversation for, let's say, the dual class share listing, which at least opens up the market more. We've seen Darktrace doing really, really well at IPO. And now we're seeing Wise, one of the largest fintechs in the world, deciding to list on the London Stock Exchange. Also, the M&A market pretty strong, with JP Morgan, for example, acquiring NatMed for over $1 billion. So, London is really proving itself to be a maturing place, not just for early stage companies, a little bit like the rest of Europe, but also as a marketplace for companies to then exit, and of course, companies and their investors. But ultimately, no VC market exists in isolation. So I would like to finish up by just asking the question, where are we heading to globally, and what role can the UK play? If we look at technology overall, we're seeing a shift, right? I think you probably all, if you're here as investors or technologists or entrepreneurs, you would have heard everywhere that the fourth industrial revolution is taking place. And if you look at this from a technology perspective, you would actually see almost like a trend shift from the computer platforms, and now we're into a place of like a deeper layer, not just what the people can consume on a computer or on a phone and the platforms that come with it, but actually a layer deeper, with all these advanced technologies coming up. And so I would say that based on what we've seen before, the UK growing into this side of the investment even more than the way it's growing, which is across the board at the end of the day, and leveraging the access to talent, the ecosystem that is managed to create, and also at the end of the day, the close relationships with Europe, at least for what venture capital is concerned. I would say that these advanced technologies are what the UK has got a golden opportunity to capitalize on. It's doing it really well so far. It's growing this side of the investments even more than it's growing overall, which is, like I said, happening across the board. And because these technologies are so fundamental to where we're going, and are enabling other technologies to be built on top and to span out new technology again on top of those, then I definitely think that the market we're seeing is a market that is preparing to be a global leader, at least for the niche and sectors that is successfully specializing on. And that is all for me. Thank you very much for watching. And if you had any questions or wanted to connect with me, you can find me on LinkedIn. That's right there for you. But please add a note before connecting. Otherwise, I probably won't accept. And thank you again very much for watching. Thank you very much, Steve, Lee, and everyone else at Wholesale Investor for hosting me. And I wish you enjoy the rest of the event. Thank you.
Presenting now is Entelechy Academy. Entelechy Academy is the world's first accredited digital platform that enables the learning of the 54 character qualities that underpin the development of all skills. Here to talk further about this opportunity is the chairman and founder, David Carter.
Hello, my name is David Carter, and I'm the chairman and founder of Entelechy Academy. Entelechy Academy is the world's first edtech platform that enables the development of character qualities that enhance all skills. At launch, we will be accredited by City and Guilds, the Learning and Performance Institute, and the CPD Standards Office, which are three of the world's leading global accrediting bodies for educational platforms. The problem that we're addressing is the soft skills crisis that has been well reported for over 20 years by major employers, universities, and management consultants. This soft skills gap costs the economy in the UK £8.4 billion a year. And on the right-hand side, you can see lots of the skills that employers are saying that their employees lack or that applicants lack. We have spent 2 years researching with employers, recruiters, all of these management consultants, the big employment federations, exactly what soft skills are lacking. And we compiled that down to a list of 77 essential soft skills that were required by employers. And we said to them, if we build something that teaches these 77 soft skills, will you buy it from us? And they said yes. We then showed them the 54 character qualities that underpin the achievement of all skills development and said, if we build this, will you buy it? And they said, this is amazing. What is this? We've never seen it before. And we showed them how we codified how you can join the soft skills and the character qualities together to deliver a solution that helps people develop these soft skills. We've created a unique, revolutionary disruption to the learning journey that has always been used to teach any skills. And that learning journey has been accredited by those three assuring bodies. So people can end up achieving badges and diplomas in character competence, which they can put on their CV, on their LinkedIn profile to demonstrate to employers, this is who I am, as well as this is what I've done. With the £600,000 of investment that we've already raised, this has enabled us to do three key things. First of all, as you can see in this video, we built a prototype, which has been 5-star rated by both the buyer and the learner. This prototype has also been through the accreditation process with City and Guilds, the Learning Performance Institute, and the CPD Standards Office. So accreditation will be available to us at launch. And most importantly, it's enabled us to make sales or sales commitments from only 23 customers, which is 6.5 times our third year revenue targets. Character is the key to achieving everything in life. It underpins the achievement of technical skills and soft skills. And so if, for example, you're wanting to make a presentation, you need to be able to put a PowerPoint deck together, do audience research, be good at storytelling. But underneath each of those technical and soft skills, as well as delivering the final presentation, there are a bunch of character qualities that you also need to be good at. And what we are doing is focusing on developing those underlying character qualities that underpin the development of all skills. We've looked at our competition, and there is no direct competition. Wellness apps are useful to look at because of some of the excellent UX and UI that they offer. Learning, professional development, competitors are all focused on technical skills with a few soft skills components, but very little, and none of them offer anything on character development. And the training providers are our customers rather than competitors, because they're the ones that we'll see in a minute are buying our solution. We have 3 competitive advantages. We have at least 2 to 3 years of first mover advantage. We're the only company that's ever codified the 77 soft skills and how they connect with the 54 character qualities, so that can become an industry standard. And we're the only company in the world that can accredit and offer digital badging of achievement in character capability. There's a huge market opportunity just in the UK, but this is obviously replicatable all around the world. In the UK, we've decided to initially focus just on the 1.4 million apprenticeship market. And if we achieve only 5% of that market over the next 3 years, then we can deliver a business that will be worth 50 to 100 million pounds. We have already, in the last 6 months, based on our prototype, entered into sales agreements with only 23 customers that can deliver 6.5 times our year 3 revenue targets. And these are from major training providers that provided training for thousands and tens of thousands of young apprentices. We put a team together that has over 90 years of experience of teaching, mentoring, and coaching, and an award-winning app building design and development company. We're now seeking to raise £3 million for a 28% stake, which will be diluted down to 25% after a 10% employee equity scheme, which only vests once we get to 50,000 learners, which is 5 million of revenues. And in this round, we're offering it tranche A at £5.75 a share, which takes us through to launch. The funds will be used to build the platform, commission some content, some pre-launch marketing, and payroll and other operating expenses. So achieved to date, we've raised £600,000, which has been used to build the prototype, build the sales pipeline, get our accreditation underway. We've developed our IP codifying soft skills and character qualities. We built a 5-star rated prototype, which has been buyer and learner user tested. We've created a huge sales pipeline that can deliver our 6.5 times year 3 sales targets, and we're ready for accreditation. So what's the summary of this investment opportunity? It's a unique edtech solution to develop character qualities. We built a 5-star rated prototype, which has led to a 6.5 times year 3 sales target, sales pipeline, accreditation from 3 global awarding bodies, 2-year first mover advantage, and based on a UK apprenticeship market penetration of only 5%, and none of those other verticals, we can achieve at least a 4 times ROI on investment. So our purpose is to enable anyone, anywhere to realize their full potential. So if you'd like to find out more, please get in contact. My email and phone number are below. Thank you.
Presenting now is BioSelf Technology. BioSelf is the maker of Sensate, a consumer product addressing the enormous and generally unresolved problem of stress and stress-related conditions in an innovative and extremely effective way. Here to talk further about this opportunity are the co-founders Anna Gudmundsson and Stefan Schmelik.
Hi, BioSelf Technology is the maker of Sensate, and that's a groundbreaking consumer product that taps directly into the primal part of the nervous system to provide relaxation in the moment and improve stress resiliency over time. We have an effective product in the market and really good early traction, which we'll tell you all about, but we'll just start by very briefly introducing ourselves. My name is Anna Gudmundsson. I am co-founder and CEO. I have a solid technology industry background with senior management roles for the last 15 years. I've worked in large and small tech companies. I've been turnaround CEO on board of listed company. I've raised money, pivoted, scaled, failed, restructured, sold, etc. And it's very exciting for me to get to take Sensate to the world and scale the business together with Stefan.
Hi, my name is Stefan Kmelik. I'm co-founder with Anna and inventor of the Sensate technology. I'm a lifelong meditator, technology innovator, and a physician with 30 years experience of working clinically with tens of thousands of patients experiencing stress and anxiety. And I'm fortunate enough to have Anna as my shared visionary. At BioSelf, we believe that stress and anxiety are the biggest problems facing society today. The corrosive impact of stress has a direct and knock-on effect on lifespan, quality of life, and productivity. The cost to the individual, the economy, and society is incalculable and unsustainable. This leaves the consumer market with both the incredible opportunity, but also the responsibility to provide innovative and effective solutions that will fill the gap between the global consumer need and failing solutions. Our solution is Sensate, a unique hardware device plus digital solution with a granted patent and an international trademark. Of course, I'm wearing one right now. So how it works. So there's serious science and IP behind the technology, but in essence, you simply pop the device onto the chest, you tap your chosen session from the companion app, and then lay down and allow Sensate to work. The system then delivers an orchestration of frequencies designed to tone the vagus nerve and your nervous system, synchronizing vibroacoustic sensation with specific engineered sound via the headphones. The outcome is the increase of the relaxation response, leading to a profound calm state within 10 minutes for virtually all users. And here's the thing, Sensate is a solution that actually works. In a recent survey, 90.5% of respondents said that Sensate was equally or more effective for stress, anxiety, and insomnia than prescribed drugs, meditation, relaxation, or other technology solutions. In the clinic, this kind of physiological activation requires a serious array of technology. Sensate eliminates 99% of the hardware by turning the human body into the instrument. By leveraging the technology of infrasound, bone conduction, and thoracic amplification, we target the nervous system and especially the vagus nerve, the body's control center for stress resiliency. The sheer scale of the global stress and anxiety crisis is catastrophic, and it touches almost everyone on the planet, never more so than in the last 18 months. This mass global problem has few effective solutions, as traditional and medical options are failing to involve consumer as part of the solution.
We are building a subscription-based business model for a very large consumer market. We have started by launching a hardware product together with an app. We have also chosen to sell this online, direct to consumer, and on pre-order. And this way, we have significantly increased our cash runway and had the ability to reinvest some funds into marketing and also manufacture and deliver over 13,000 products to customers. At this next stage, we introduced a premium subscription, and we then transition the full offering to a subscription-based business model by Q2 next year. Our subscription model both benefits the user in terms of lower barrier to entry, but it also increases our lifetime value and therefore commercial business value. But ultimately, we are building an ecosystem of products and digital services that in a very, very rapidly growing market. Our target user base breaks into three distinct groups. The largest group is in the sort of anxiety sufferers, and this market is unfortunately absolutely massive. A recent survey on our users showed that already at this early stage, almost a third of our user base bought a Sensate as the first action they took to deal with their anxiety. So this is a really great indicator for our ability to sort of cross the chasm and to have that sort of evidence really at a very early stage.
In terms of our competitive advantage, we love all the companies that are educating the general population about the critical importance of managing stress. This actually creates market acceptance for our effective solution. A better educated market leads to more Sensate sales. Compared to rivals, Sensate is simple and easy to use. It outperforms other solutions and requires no skill, effort, or training. We have a patent covering the chest location, which we believe is the smartest part of the body. The system delivers a highly enjoyable, engaging, and cumulative experience in 10 minutes. Compared to challenging and more hard work solutions requiring a significant upfront self-discipline, or app-only solutions with a typically less than 5% retention rate.
We are a very lean and senior team. As an executive team, we're all experts in our respective fields. We bring decades of experience and expertise in our areas to the table. The senior management team, as well as our wider team, is both remote and global, and we're very technology and data-driven, and also very collaborative and driven team. In terms of our traction, we've had a great traction, also been able to really maximize on our resources to date. We six-folded our sales from 2019 to 2020. So last year had pound sterling 860,000 in sales. And also Q1 this year closed up 150% on Q4 2020 without any further investment. We're on track for a 4.3 million in revenues this year, and this money will help towards that. In terms of our longer milestones, $250 million in revenues in 2025 is genuinely achievable with our products and business model. This would be extremely hard to achieve with something like an app model. Also, our amazing adoption numbers are great for us as a business, but even more importantly for our customers, the best tool is the one that people actually use, and that's what also will ultimately solve the big problem. So finally, there is a near-term opportunity to participate in a SAFE. That's a simple agreement for future equity, which will close by the end of July or sooner when filled. We're raising a maximum of sterling 700k. Minimum target is 300k, and we've actually already raised 275k. All of that's been from international investors. We're raising a seed round next quarter. This will also allow us to deliver on all our targets. And the SAFE offers preferential valuation cap and a discount for a few investors that participate. Minimum ticket's 40k. Both of our venture capital investors, 10110 Ventures and Unlock Venture Partners, are participating, which offers some extra confidence in terms of DD, etc. We will give priority to investors for the upcoming seed round, and we expect that will be also the last opportunity for individuals to participate. So if you are passionate about what we do and have the ability to participate in the SAFE, please do let us know very soon. And thank you so very much for your time.
Presenting now is Make to Rent. Make to Rent use investors' capital to construct or purchase discounted assets in order to create superior asset growth and returns, not just leases. Here to talk further about this opportunity is the founder, Tim Pepiat.
Good morning. My name is Tim Pepiat. I'm the founder of Make to Rent. Make to Rent is a new fund created to take advantage of the distressed section of the property market. It has been designed to deliver both dividends and a share of the asset growth over the life of the fund. It's not an exaggeration to say that the world of work has changed forever due to the recent pandemic, with companies small and large deciding that it's preferable for employees to split their work time between home and the office, and in some cases doing away with centralised working altogether. Little did we know when we embarked on the Make to Rent project 3 years ago that it would have the potential to provide solutions for mental health, the environment, and more importantly, people's work-life balance. What has been acceptable for landlords historically, furnished or unfurnished spaces, we believe will give way to a more holistic living experience, one we have been planning for a long while, where working from home involves exercising and working from on-site facilities, where rent, utilities, and things like concierge facilities are provided through a single monthly fee. The tenant will no longer have to worry about being in to receive parcels or picking up their dry cleaning. They simply provide those instructions to the concierge, and go about their business. From the investor's perspective, they benefit in several ways. Firstly, from the development profit created through either the purchase of a distressed asset or by building out a planning-approved site. Secondly, through asset appreciation in a burgeoning UK market. And lastly, by dividends created through rental income. Yes, this chart is at the upper end of our calculations, but we'd like you to consider the following. Firstly, that as an investor, you own the asset, something not the case with similar concepts in the office rental space. Secondly, as an A-class preferential shareholder, your fund management fees are returned on exit before any profit share with management is calculated. There is a full stress test for this in the investor information pack, which is available by self-certifying through our website, www.maketorent.com. In assembling the team for this project, we have combined both financial and regulatory experience with that of construction and operations. Shona McKenzie, for example, has 4 decades of financial services experience and is widely credited with the birth of regulatory hosting in the United Kingdom, as well as spending 15 years as a US institutional stockbroker and advisor to family offices. Putting together the advisory team was altogether more challenging. All known to make-to-rent directors for a considerable period, it has taken incredible fortitude and patience to assemble. To give an example of this, it took 7 months to obtain Barclays approval to add Chris Ball, the Vice President at Barclays Wealth. Transparency of operations is a cornerstone for make-to-rent. From early planning sessions with our lawyers in 2019, investor communication and regulatory rigour has been our focus. Financial regulation by the Financial Conduct Authority is amplified by information provided by both Sturgeon Ventures LLP, the fund manager, and Mainspring Fund Services, the fund administrator. The latter providing a secure and personalised portal space for every investor. The interesting thing about these graphs showing continued asset growth in the United Kingdom property market over a 12-year period is the fact that distressed opportunities still existed during this time. Why do we feel confident in replicating this in the future? It's because we use state-of-the-art software to analyse potential deals and work back from our target returns. Something I learned from friends at Hanson Trust many years ago. Everything about make-to-rent operations is digital, from investor onboarding to tenants' application and rent payments. Are these modules proprietary? Absolutely not. We are focusing on being a world-class real estate team, not software provider. There is a host of fantastic software that we have personalised for this project. The initial raise is for 20 million and is to refurbish or construct 1 or 2 apartment blocks. In return, investors receive A-class preferential shares, 100% of dividends created through rental payments, and 50% of the asset growth. Uniquely, as mentioned previously, fund management fees are returned on exit prior to the calculation of profit sharing with management. We have designed the tenant experience to be seamless and deliver robust and stable returns to investors alongside the appreciation of the distressed asset. They will apply, sign contracts, check inventory, pay rent and raise any issues through a personalised app. Their occupation, utilities, broadband and facilities, as previously mentioned, are provided through a single monthly fee. Finally, we are active on social media, and there is a frequently asked questions section on our website. Please take time to have a look at this. It leaves me only to thank you for listening, and we look forward to answering any questions you may have.
Presenting now is Tamboran Resources, a company that intends to play a constructive role in the global energy transition towards a lower carbon future by developing low CO2, unconventional natural gas resources. Here to talk further about this opportunity is Chairman Dick Stoneburner.
Good afternoon. My name is Dick Stoneburner, and I am proud to be the chairman of Tamboran Resources. I've been lucky enough to be in the oil and gas industry for over 35 years, and it's fair to say I've seen a lot in my time. I have served in a number of roles, from exploration to operations to senior management in conventional and unconventional energy. I've seen a lot, but energy as a whole continues to evolve, and this is one of the most exciting times of my career. Tamboran Resources is a company that has the potential to make a huge impact on the energy mix of Australia and the wider Asia-Pacific region, as well as playing a role in decarbonizing the world. Let me first tell you a little bit more about myself. I'm a former co-founder of Petrohawk Energy Corporation and served as its president and chief operating officer. Petrohawk was the developer of what became known today as the Eagle Ford Shale in South Texas, one of the largest and most successful unconventional reservoirs in the lower 48 states of America. We were the first company to drill and complete a commercially successful well in the core of the play, and were one of the preeminent operators. Petrohawk eventually merged with a much larger company, BHP Billiton, where I served as president of the North America Shale Production Division for BHP Billiton Petroleum. I'm equally proud to be on the board of the Switch Energy Alliance, which is a not-for-profit organization that is a leader in educating the world on the energy transition, as well as a leader in addressing energy poverty throughout the world. Tamboran, and the Beetaloo Basin more broadly, represents an opportunity to invest in next-generation energy on a global scale. And it is located in a country that is quickly transitioning from coal to cleaner forms of energy, such as natural gas, which will be integral in addressing climate change in the Asia-Pacific region. The quality of the reservoir being targeted under Tamboran's acreage is the core of the Beetaloo. In fact, it's the core of the core, the best of the best. In fact, this opportunity is as good or better than any shale play I've ever been involved with. Others have made this comparison, but there is truly a reason to compare the shale reservoir in the Beetaloo, and specifically Tamboran's acreage, to the Marcellus Shale in Pennsylvania, which is recognized as the most prolific gas shale reservoir in the world. The Tamboran acreage represents similar scale, in excess of 100 plus TCF, and similarly high-quality reservoir properties as the Marcellus Shale. Simply stated, we believe Tamboran's time has come to become the true leader in the Beetaloo Basin. Tamboran will be the true leader by not only aggressively developing the resource, but also by utilizing industry best practices that made North American shale operators so successful. The board and management of Tamboran, led by our managing director, Joel Riddle, have deep technical knowledge and operational experience in developing and commercializing large-scale unconventional gas assets in the United States. My experience with Petrohawk is a classic example of aggressively developing a resource and using best practices. In 2008, we didn't have a single molecule of unconventional production from the Eagle Ford, Haynesville, or Permian shale plays in North America. However, by 2011, when we merged with BHP, we had literally created billions of dollars of value, and America had turned the corner on its reliance on foreign oil. Like mobile phones leapfrog telephone poles, Australia has the opportunity to apply the technical learnings from North America over the past 2 decades to accelerate the development, what we believe will result in a significant low CO2 resource in the Northern Territory. We will not only lead with technology, but the environmental impact will be minimized by adhering to the best practices that have been established under decades of environmental scrutiny in the United States. Tamboran has committed to be a net zero carbon emitter once production has been established, and will support the transition to net zero emissions in Australia and the Asia Pacific. This will be done through integrating renewable forms of energy in the field and utilizing carbon offsets for our equity share of Scope 1 and Scope 2 GHG emissions. The quality of the gas from the Beetaloo, with only 3% CO2 content and no other impurities, is also unrivaled in terms of being a clean and low CO2 option for Australia and the Asia Pacific region. Beyond the quality of the resource that exists in the Beetaloo, what equally excites me is that Tamboran has multiple commercialization pathways to market. These include Tamboran's joint venture agreement with Jemena, which allows for the completion of a gas pipeline to bring gas to the local Northern Territory market as early as 2023-2024 and ultimately to the Southeast domestic Australian market by 2025. Additionally, a hugely exciting opportunity for Tamboran exists in South and Northeast Asian export markets as well. Natural gas demand in Northern Asia has grown at a rate of 7 to 8% per annum over the last 10 years. In the next decade, Asia's demand for high-quality, clean, and low CO2 gas is going to continue as it looks to decarbonize away from coal. Tamboran's ability to link with LNG supply hubs in Darwin and Gladstone will be key to servicing that demand, and it is only 3 days via LNG tanker from Singapore and 9 days from Tokyo or northern China. Both state and federal governments across party lines agree now is the time for low CO2 gas and for the Beetaloo to fulfill its promise. The Beetaloo Basin has been earmarked by federal government as highly strategic for the future direction of Australian gas supply, with significant upside potential to convert multi-TCF resources into large 2C resources and 2P reserves. The Australian Competition Regulator, the ACCC, specifically identified the potential of Tamboran and its JV with Jemena as a priority development to address high costs and combat anticipated domestic gas supply shortfalls by 2024. This is energy security, and we are watching it evolve every day. Furthermore, in December 2020, the Australian federal government announced $50 million in incentives for the industry to accelerate gas exploration and development in the Beetaloo Basin. In closing, this is an incredibly exciting time for Tamboran and for Australia. As exciting as any in my career. I am truly glad to be part of Tamboran Resources and welcome you to join as well. Thank you once again for your interest, and I look forward to you joining us on this exciting journey.
Presenting now is LifeArt. LifeArt has patented technology to manufacture low-emission coffins and caskets, which can be used in the funeral process, just like traditional products. Here to talk further about this opportunity is the CEO, Mike Grehan.
LifeArt is all about developing digital print technology to create coffins that are green, so good for the environment, affordable for everyone, but more importantly, personalisable, which might sound strange for the funeral industry, but if you think about it, in your lifetime you probably buy 1 or 2 coffins, and it's a very, very difficult choice. And if we can make that choice easier for families by allowing them to design their own coffin for their mother or their father or their brother or their sister or their loved one, I think that's a good thing. The feedback we get is incredible, absolutely incredible. And I've been fortunate enough to work in the funeral industry for 20 odd years, and I've never seen this sort of feedback. It just is quite amazing. And our partners that we've managed to work with have shared the vision, if you like, because this is a tough change. We're changing an industry that is very traditional. It doesn't embrace change, and our partners are Bluebird, Ken Design and Chile, and together I think we will change the world, and I think it'll be a better funeral world for people. Look, I would like to think we're a technology company, because ultimately it's all about the tech. We don't really want to manufacture, we want partners to manufacture. I know if we get the tech right, that's the key thing, because it's a single point that you can use around the world. To manufacture, you've got to be in every country. We don't want to do that. We want our partners to do that because they're local. We happen to have the technology, so we do see ourselves as a technology company. In fact, we call ourselves Death Tech. It's quite an unusual quote, that one. It's how it's manufactured more than anything. We work with two big global board manufacturers who understand what we're trying to do, and they work very closely to work to our specifications. But ultimately, the strength in what we do is the patent around the structure of the coffin or casket. It was actually designed by a German Australian who's a mathematical genius, and he's still involved to this day. And I haven't found anyone in the world better, and I've met lots of people who design and create coffins. But fundamentally it works. It's very lightweight, it's 10 kilos, but it'll hold 260 kilos. Absolutely no problem by the handle. And people go, yeah, but don't you carry them by the handle? A lot of them don't. A lot of handles aren't designed to be carried, and people don't realise that. So ours actually works properly. I've been to a lot of the testings that we've done around the world, and in Paris, where the association tests the coffin, they put a ton through it and it didn't break. That gives you a bit of a hint how strong it is. They move aircraft engines in what we use. It's a very different technology. We're still in early stages, I'll put it that way, because we're breaking markets open. Our objective is to become a dominant player in every part of the world. We've got a very clear path now in terms of what we think penetration will be in each market. And I have unbelievable faith in the consumer. The consumer will always decide if given a choice. And the hard part is get the choice in front of them. So for us, any bit of publicity or any bit of promotion is good promotion. A family informed is always a much better family that's not informed. We all like choices.
Presenting now is Rewire Holding. Rewire Holding are addressing the vast unbanked market segment worldwide, which is underserved and unaddressed. Here to talk further about this opportunity is the co-founder, Jose Marino.
Hi everyone, my name is Jose Marino. I am the CEO of Rewire Holding. We are basically a fintech innovator backed by patented intellectual property rights, aiming to break even in year 4 post a Series A investment. The company purpose, well, we aim to become the reference fintech company for users and small businesses to improve social and financial inclusion, but through innovative technology. The main problems we want to solve are actually compared to 5 months ago when we made the last presentation is one more. So today we got 4. The first account users are required to have another account to open their first account. Obviously it makes no sense, but we solved the problem. Merchants, well, they have a high cost of doing business when collecting payments by current point of sale payment systems. And then fintech apps in general all have to have internet access to make a transaction. It limits the possibilities. So we're going to fix that too. And then the last one, which affected us personally as a business just recently, is fraud prevention. Mostly those are detected after the fact and it erodes profits. So we have to fix that problem too. The solutions to those issues were the following. The first ever account deposit is the main issue. So we fix that by a technology we call bumping, where users can deposit cash through a nearby user by bumping technologies, literally bumping 2 mobiles together, and they transferred their first deposit into their own account through a nearby user. Merchant payments collection, well, our technology auto-configures the smartphone as a proprietary point of sale for a fraction of the current costs. And then internet access, well, we got 2 IPRs, 2 filed patents, and actually granted in the US and in Europe. Our users will be able, with one click of a button, to auto-configure their smartphones and share internet with nearby users from our system. And last but not least, a very important one is the fraud prevention. Our patent pending technology, which we filed literally less than 2 months ago, allows to prevent fraud on existing accounts and blacklist fraudsters from creating future new accounts. Okay? What is the secret sauce of our business? Well, basically the secret sauce is the products and lies inside the products, the technology we use, and the patents we filed for it to give us the protection we needed. In fact, IPR protection protects against very cash-rich other competitors. It makes features in our product offering also very unique. As our corporate slogan says, we don't copy, we innovate. The market size of the 3 segments we're going for, basically, main one is consumers, is on the Hispanic diaspora, Muslim diaspora, and then the British expatriates. I mean, roughly 2.8 million Latin Americans in Spain, 44 million Muslims in Europe. That's a staggering number. The second market segment we want to address is the POS or point of sale segment. Globally today, that market segment is $75 billion US, a massive market in which we want to have, our little piece of the pie. And then the last one, which I told you affected us just recently, just a couple of months ago, is fraud. A very costly business. So we actually fixed it by IPR and we filed a patent for it. We reduced, in our case, our fraud protection by roughly 80% just in a couple of weeks when we switched on our own patent pending technology. The global market size for that market segment, a staggering 28.8 billion today, and expected to grow just in the next 3 years to $63 billion. The partnership, well, just importantly, maybe to give you an update from 5 months ago to now, we increased the app installs to 27,000 already, 9,000 active users. Roughly the cost per registration is about 52 euro. And the key partnerships stem from the last patent we filed, which is the anti-fraud system. We signed a very nice agreement with a company called Kite Consulting. They're basically a firm who provide PCI certification for third parties, including for traditional banks, fintech companies, and so forth. So from the 4th quarter of this year, they will provide our anti-fraud check system to their clients as an additional option. We still are negotiating with Dunkin' Coffee Spain for a letter of intent. We have no doubt we will achieve it because we already did a deal with them back in 2018. With the vending machine business in Spain, okay, that LOI is already done. And that company is virtually just over 100 million euro turnover. So, you know, we get the nice piece of that action. Who are we as a team? Well, on the top left, you see myself with two other co-founders. And on the right, the bigger picture is basically 15 guys in the rest of the team that provide the R&D, customer support, and you name it. The ask for this Series A. Well, before we ask, let's tell you what we already did in raise. We raised $750,000 US dollars from a friends and family seed round back in second quarter last year. In the third quarter of last year, we raised seed investment of about $2 million from one YouTube channel from our co-founder that you saw in the previous picture. And literally, end of last month, we closed this year's seed round, and we raised 2.3 million US dollars. So what is the ask? Well, we're asking for a Series A of about £6 million. And we leave you with the highlights, which are basically this. On the right, you see a newspaper ad, which is in Spain, massive distribution in printed version, but also online. And I'll leave you with the highlights here. Look, I thank you very much. I hope to see you guys as an investor soon. And thanks for having me.
Presenting now is JAVIS Holdings. JAVIS is an emerging technologies retailing company. Their purpose is to transform the way we live, work, and play with emerging technologies. Here to talk further about this opportunity is the Chief Digital and Executive Officer, Joyce Lim.
Hi, I'm Joyce. I'm the Chief of JAVIS. JAVIS is just a very intelligent system. We are an emerging tech retailing startup with vision to transform the way we live, work, and play. Our mission is to accelerate the adoption of intelligent ecosystem for consumers, businesses in the most fun and engaging ways. Today, I'm so excited to share with you that we are building the world's first automated bubble tea ecosystem, Jupiter. A little background on bubble tea market. Bubble tea first appeared in the early 80s in Taiwan. It is a dessert, a two-in-one snack and drink. A typical bubble tea order will include tea, milk, flavor, topping, brown sugar. Perhaps it is this wide variety of choices which makes it so addictive. In 2017, the New York Times featured an article about bubble tea becoming mainstream. It is about 10 billion in market shares and projected to continue its explosive growth. At first glance, the current bubble tea market appears crowded and competitive, but we see it differently. We see opportunity in an underserved market where there are huge demands but insufficient supplies. There are issues associated with traditional bubble tea stores, such as long queue, labor shortage, high staff turnover, inconsistent product quality, and expensive retail space. But we can disrupt and transform this by fully automating the production of freshly brewed tea. With the use of emerging tech, it enables pre-ordering, 24/7 operations, consistent quality and taste. We are able to further shrink the operation of a traditional bubble tea store from 400 square feet to about 32 square feet, which is about 2 by 1.5 meters, and without frontline staff. This allows us to scale to thousands of locations globally with mass production. We envision a world with thousands of Jupiter carts in every street corner serving bubble tea around the clock. We bring quality, convenience, entertainment to bubble tea fans around the world. Jupiter has advanced robotic system and smart tea brewing and dispensing machine. You can order through mobile app, pay via our wallet. It is a perfect solution for current pandemic environment as it is fully contactless. We have predictive fulfillment capabilities to lower and manage fulfillment costs. For targeted advertising and marketing, there are transparent screens to show data-driven content. Gamification on mobile app will engage our fans for interactive experience and social engagement. Our unique economics is amazing. By selling 300 cups per day with operating profit of 33%, we can achieve a payback period of 7 months. To break even, we only need 120 cups per day. With strong operating cash flow, we will be able to finance 80% of the cost of each Jupiter card. This will make our business capex light. Our edge is that we know how to build our own proprietary technology at a cost and production rate, which will enable us to scale profitably. On top of that, we strive to be one of the leading bubble tea brands in each of these countries to make bubble tea pervasive. Our card can produce up to 600 cups of bubble tea before the next replenishment cycle and is able to generate more than 350 permutations for customers to choose from. As a bubble tea fan for more than 20 years myself, I do not compromise on the quality of my drink. I take it upon myself to ensure all our customers enjoy our product. It is our goal to be one of the leading bubble tea brands by redefining the bubble tea competitive landscape with technologies. Our key differentiator is that we are producing freshly made drinks without any human intervention. Our target customer segment is Gen X to Gen Z, which is about 45% of the world population, or loosely translated to 3.6 billion people in this category. We can reach out to them through transport hub, workplaces, malls, schools, and even hospitals. Our platform has a multi-sided offering: the bubble tea, digital out-of-home advertising, gamification. Just the bubble tea alone, we are making an average profit of $2.80 per cup. Based on a top-down approach market report conducted, the bubble tea market is about 10 billion in 2019, and China being the fastest growing market, while US is one of the largest. As we are creating new market through automation, we will expect the current market to grow. Based on bottom-up approach, the Singapore market size is about 400 million per year. But what is interesting is the potential market size for Singapore is actually 2 billion per year. Since our market segment is 45% of world population, now imagine if each of them drink 1 cup of bubble tea per month, the potential global market size is about 200 billion per year. Now, do you see what we see? The opportunity to serve this potential market with the use of emerging tech. I'm very fortunate to secure 2 notable partnerships since we started in January this year. Our office is located at Technology Development Center in ITE Central. Our first card will most likely be here as well, where there are 10,000 students. We are also working closely with China Singapore Suzhou Industrial Park. They are a government-to-government organization. Through them, we can gain access to connections and capital in China. Our second card will likely to be within CSSD Singapore co-working space. We have an experienced team with in-depth knowledge of emerging tech, digital transformation, retail, international market, operations, and engineering. We are currently a 10-man team, and we are still expanding. By the end of the year, our team will be more than 20 strong. We have just concluded our 500,000 pre-seed round at 10 million valuation cap, and we are now seeking 2 million in the upcoming seed round. Structure will be safe at valuation cap of 25 million. The funds will be deployed to create value and deliver our key milestones. A large part of it is really focusing on the product development, producing MVP and pre-production units. We are in the midst of registering our patents, and the remaining funds will be for corporate development. The key milestone of how we begin, where we are now, and our exciting journey ahead. JAVIS was incorporated in January this year. We have completed the design of our MVP and has closed a pre-seed round of 500,000 and 10 million valuation cap. The next milestones for us is really to build the MVP, test marketing in Singapore, and concurrently raise 2 million in the upcoming seed round. This will put us in a good position to raise 25 million Series A early next year, to build mass production facility to scale up to 11 countries. This will also propel us to 1,000 Jupiter cards by January 23, with revenue run rate of 350 million. We target public listing in June 2024 and reach 9,000 cards and revenue of 1.7 billion by 2025. All in all, we see opportunities in this underserved market. We have an experienced team who knows how to execute the plan to mass produce to scale globally. With clear path to profitability, we can build a great business which will last for generations to come. Thank you for watching. My name is Joyce, the Chief of JAVIS. Looking forward to discuss with you about our future collaboration at JAVIS. Bye-bye.
Presenting now is Madara Invest, who are revolutionizing investment banking industries and bringing it digitally to all the people in the world for good. Here to talk further about this opportunity is Krasimir Kirov, Managing Director and Founder.
Hello there. Thank you for watching. My name is Krasimir Kirov, and I'm the founder of Madara Invest. I'm going to present you this incredible investment opportunity. Madara Invest is revolutionizing investment banking industry and bringing it digitally to all the people in the world for good. There is no other solution on the market that combines professional training and asset management offering and full banking services such as current account, multi-currency debit and credit cards, and loans. We are building this solution. The problem is that the traditional banking is not cost efficient, especially at the international level, not flexible enough due to layers of legacy infrastructure, and lacking social engagement and suffering from reputational issues. While on the other hand, fintech service providers currently concentrate only in niche segments. They heavily rely on revenue streams from basic features and are rarely used as a primary bank account. The solution is branchless, app-based bank where clients can use professional investment and trading services, use full range of banking services, enjoy user-friendly app and service, pay lower prices for the offered products, have high social engagement and user satisfaction, and make the world a better place considering the environment. The sector is clearly booming, as evident by players such as Revolut and Robinhood, with millions of new clients and valuations of up to 40 billion. The market is growing as well, with number of households in the European Union north of 110 million and number of cashless payments per day above 300 million, and these numbers are steadily growing. Our target customer profile includes freelancers and gig economy, video gaming market that is new high growth market segment. It is still underserved by the traditional fintech providers, retail customers who will benefit from more value-added services, as well as online marketplaces and platforms, and small and medium enterprises. The competition includes some of successful challenger banks here in the UK, such as Revolut, Monzo, and Sterling, as well as the German N26 and the American Chime. There are other competitors, such as Robinhood and Nutmeg, as well as the traditional players like Goldman Sachs and Barclays, and not to forget the California-based fintech Aspiration. Our competitive advantage over the traditional banks is the lower price due to the IT cost optimization and the flexible product offering in line with the latest trends in fintech, while we differentiate from other challenger banks by aiming to gain market share and reach profitability faster by targeting underserved market segments, and gain material synergies and cross-sell, literally the training and asset management services, while also staying with high social engagement and responsible investing, and make the world a better place. When we compare ourselves with the competition, the thing that clearly differentiates our app is the professional investing and trading feature, while we will also provide all the other features that are currently offered by the challenger banks, such as contactless payments, real-time notifications, spending analytics, and so on. We are proud that Madara Invest project comes with important goals. We are targeting zero footprint target from the beginning, aiming to set the example for the future. We are also planning to become certified B Corporation and participate in the 1% for the Planet organizations. On the social responsibility part, 10% of the net profit before taxes on holding level will be donated to charities for children. Moreover, our charity program will be realized in collaboration with trusted partners, such as UNICEF. We are members of Level 39, that is the world's most connected tech community. Its members include Revolut, Tesla, Ripple, UBS, and many more. We are also members of Innovate Finance, that is the largest UK fintech association, supported by the City of London. And we are members of Fintech Circle. We are backed by some notable investors, such as London-based investment banking boutique, Sirma, that is a leading international banking software company that serves more than 14 banks on 4 continents, including Europe and America, and FPI, a prominent investment company and a recognized leader in the real estate market in the EU. Our product is the app that includes full range of banking services, global markets, trading, and wealth management. And the beta version of the app is ready. Our team is a remarkable one. We have assembled highly skilled and experienced professionals that held numerous executive positions in some of the world's largest banking companies, such as Goldman Sachs, Nomura, EBRD, and many others. The project goal in 5 years' time includes reaching 500,000 profit-generating clients, net income of 93 million, and total assets above 4 billion. We have completed fundraising in the amount of 1.79 million pounds, with which we have successfully acquired and capitalized fully FCA-regulated investment company. We have completed successfully the pre-assessment stage for obtaining our banking license, and we built beta version of our app and related infrastructure. We're now looking for 5 million capital increase investment. This will enable us to obtain our banking license, to upgrade our investment management license, and to finalize our software infrastructure and prepare to go live project. Reaching these important milestones will significantly increase our value and investors' return respectively. Potential exit strategies within 5 to 7 years from the project start date include listing on a stock exchange or partial or full sale to a strategic buyer. Thank you very much for watching.
Presenting now is Toodle, a groundbreaking m-commerce platform for bricks and mortar business owners and operators in retail and hospitality. Here to talk further about this opportunity is the CEO, Alan Osborne.
Welcome to Toodle. I'm Alan Osborne, the CEO and co-founder of the company. We've been in business since 2018 and we're based in London and Dubai. We provide software as a service to small, medium businesses who cannot afford to access the rapidly expanding m-commerce trend in retail and hospitality. What we mean by m-commerce is customers using their phone to transact in a safe and convenient way. Additionally, merchants that come on our platform see increased sales and lower operating costs, and we can get them live within 7 days. The problem at high level, and it's a global one, is that retailers and hospitality companies have to adapt to post-COVID consumer lifestyle changes, or they risk becoming outdated. There's a significant challenge at merchant level. Many of these businesses have been either closed or had capacity reductions, so their balance sheets are under huge pressure. From a consumer perspective, they've become very cautious, particularly about physical contact, particularly using third-party equipment. But there is one bright side. They are very used now to QR code scanning with the advent of test and trace type systems. The high-level solution, as espoused by McKinsey here, is that retailers and hospitality operators with the highest degree of automation, touchless automation, will enjoy clear competitive advantage. Now, some of their bullet points on the right-hand side here The one I like particularly is the 24% of consumers have purchased a retail product online while they've been in store. That's a significant change about how consumers are working with their technology. Now, we know the big players have got their own apps and the tier one merchants are developing their own systems, but low-cost in-store commerce is the answer for the SMEs, and Toodle sits in that particular sweet spot. Toodle covers a variety of shopping methods. You can see on the picture here, we've got scan in store, fast track exit, click and collect, click and deliver, click and be served, all in one app. But it also sits across a number of shopping channels, be it fashion stores. You might buy and check out in a fitting room and not have to go to the cash point. You know, in your bar and restaurant, you've seen some of these approaches. But also things like football club, venues, festivals, outdoor events. What we're going to do now is show a couple of clips, a couple of examples, just to show you the end use case. So you've seen the end use, but what's important to remember here is that we Toodle are a B2B business. So top right, you can see the backbone of our integrated m-commerce platform. We've spent 2 years developing this in Dubai, really off the radar a little bit, making sure we've got the right level of market-facing functionality, you know, be it repeat orders, promotions, discounts, variants. I hate to use that word to particularly our UK audience, but variants are actually very important if you're a merchant trying to sell pizzas, to geolocation, to payment integration, payment gateway integration. We run 2 apps. You've seen the core Toodle app with its scanning capability, or we have a web app. That's really more aimed at the tourism market, where customers don't want to download apps, and we can brand that for the merchant, as you can see in this example on the right-hand side. But again, more for the tourism sector. In terms of competitive advantage, 2 things that make us different. One, on the left is functionality, and you can see, we've got all bases covered, even more than Amazon. And on the right-hand side, it's about implementation. What we have seen is some competitors out there using quite robotic upload processes, help desk services. We are people focused. Our business partners, who are soon going to be morphed into franchise partners, are there to handhold the business, and they are highly incentivized to actually develop that retailer's business. So to stay with them and stay through the journey. We've had a really good example. We have a 5-star hotel in Dubai who had a previous app who would just dumped some QR codes and left to get on their own devices. We've taken over. They've loved our service, and we're seeing some fabulous sales through that outlet. The market is huge. Just in the 2 markets that we're based in, there are 300,000 outlets. 1% of this market is 3,000 merchants, and that's not a number we've plucked out of the air. I'm going to come back to that 3,000 number, so hold on to that one. But our app and our system is multi-currency, multilingual, and we've already had interest from Portugal, from Spain, from Hong Kong, without really trying to market it. Current UAE clients, again, some quite small ones, some are pilot stores, but I would highlight, let's say, Nakheel, who you may well know, a big property company in the UAE. Our board, probably characterised by grey hair and no hair. But we've all worked at board level, and we know what it needs to get a business off the ground and how to make a business work. A lot of retail experience in my own case. Peter's done SAP introductions and implementations through DHL and GSK. Alan's done a huge amount of work on marketing for, let's say, the Alpha 10 group, who are massive in the UAE. Noel Connolly on the right-hand side, we've just brought him in. He's written his own books on sales. And Hash Lada down at the bottom just recently joined us. He's ex-chairman of Aurora Fashions, so Coast and Oasis. So really good retail credentials. The ask, we're offering 15% equity against the current valuation of 2.7 million. That valuation is done on Equidam, which is a startup platform, a platform for valuing startup businesses. And that's 400,000 raised, and we are EIS, investable in the UK. As we said, the money really is not about tech. Tech's ready, we're done. We need to drive the business now, to drive traction. So that's to set up the franchise network and push awareness marketing. That is B2B marketing, not B2C marketing. We know that's hugely expensive. In terms of our roadmap, as you can see on the left, we started 2018. We've put a lot of time, money, and effort in so far. We have a commercially viable product. This year, we're integrating traction. We're just setting up in the UK. We've qualified as an Oracle partner. That's been a lot of hard work. And once we get our investment, we'll be scaling up through the rest of this year and into next year. And we're cash flow positive quite quickly, in actual fact. The following year, we'll reach profitability. And then we see the exit opportunity in 2024. So back to the highlights, we're demand-led. Demand-led being that there is a market there, a growing market for these SAS opportunities in m-commerce, and their businesses that need this service. The tech, it's fully tested, consumer tested, it's ready for full-scale rollout. We have already got commercial level subscriptions and commissions that make our business viable. We have an experienced team, we've got sector expertise, and we've got industry contacts. And perhaps now I'll just come back to that little tease of the 3,000 merchants. Only 1% of the UK UAE market, initial investors will get a 10 times return in 2024. We would hope to achieve it before then, of course. And that's Toodle. Thank you very much for your time.
Presenting now is WaveTech, a US-based next-generation energy management company specializing in product life extension, data analytics, and site monitoring. Here to talk further about this opportunity is Dag Veland, CEO, Silas Pol, CFO, and Billy Amberg, Managing Director of CFA.
Hello, my name is Dag Veland. I am the co-founder and the CEO of WaveTech. We have developed a technology that doubles the lifespan of batteries, and then a system that we call site management system, which is a system that monitor and automate the use of batteries and their surroundings. These two products we now take to the market, and then at the same time, we do develop next generation product. We cover batteries from cradle to grave, from producing better batteries cheaper, making them last longer, and then we can recover them after they have been taken out of service and then put them back into service. Challenges that sectors relying on backup power often face, such as the telecom or the data centers, are that their system often underperform, meaning there's not enough backup power. The systems are often not sufficiently connected and monitored. And they are also often manually serviced. The result is high cost and risk of downtime. We solve this by installing our products, by upgrading the system, meaning ensuring better backup power, by connecting and monitoring the system in a different fashion. Then we automate up to 80% of the operation and servicing of these systems. The outcome is good economically for the owners of these sites. It's also good for the climate. We cut battery replacement in half. We can cut fuel consumption in half and up to 30% of the energy cost. That results in 67% less CO2 emission?
We have no direct competitors, but of course, we have indirect competitors like the companies mentioned here. These are companies that developed or are developing battery technology. One of the main differences is that these companies are battery makers, while we are not a battery maker, but a next generation battery technology company that is independent from a battery or battery chemistry. We are currently addressing the entire lead acid battery market, which is a $60 billion market opportunity that is growing by 6% per year and is expected to grow further. On top, we are working on adapting our technology on lithium-ion batteries to address the two biggest battery markets. Currently, we are focusing on telecommunications, data center, and utility communications. But you can use our technology in every vertical where you have a battery, like buses, trucks, electrical forklifts, but also the automotive market that we plan to address in the future. We have a lot of well-known customers, like you can see here, JP Morgan, NEC, Exelon. But let me highlight NextGen Security, as this was the first customer where we installed last year in a commercial contract the combination of battery technology and site management system at a utility company in New Mexico, USA. But the big potential lies with the plus 20 international companies that I mentioned here at the bottom. These include some of the world's leading telecommunication companies, but also one of the biggest players globally in the UPS data center market. Our team is a mix of serial entrepreneurs with several successful exits that manage companies with revenues in excess of $1 billion and raised more than $1 billion in equity. In addition, we have financial experts and world-class scientists. We accumulate more than 400 years in battery expertise and approaching 400 years of expertise in hardware and software development, coming from companies and institutions like NASA, Lockheed Martin, and other world-leading companies. So far, we have achieved more than $3 million in revenues last year. And out of the $17 million that we forecasted for this year, we already secured more than $10 million. As of today, our technology is proven and validated on lead-acid batteries. And we managed to build up a pipeline in excess of $2 billion based on the current product portfolio. In addition, we started the application process for our technology on lithium batteries and are confident that we will succeed with that and establish an exciting R&D pipeline that will lead to an intelligent battery, a battery that can monitor itself, maintain itself, and that can communicate. Simply said, a smart battery. We call it Battery 4.0. Let me introduce you to Billy. He is with CFA, our US partner for the institutional fundraise.
So my name's Billy Amberg. I'm a managing director at Corporate Finance Associates, middle market investment bank. So the Corporate Finance Associates has been serving middle market businesses and startups for over 60 years. We engage in sell side, buy side, and capital markets advisory and capital placement. Our capital markets team will be on full display for the WaveTech engagement, where we are tasked with helping them raise $35 million from a strategic and valuable institutional investor, while they go out and raise around $8 to $10 million from individuals and family offices. Corporate Finance Associates has a global presence with 30 offices in the US and 15 in Europe, 2 in India. Our job is to bring the power of our organization, our expertise, and our experience to help WaveTech ensure successful outcomes for current and future investors, as well as all that are part of the company. We are excited for WaveTech's ability to continue to raise money, to continue down the research and development path, and to continue to support the operations of the company, while we seek an investor that can further that research and development, as well as provide capital for enhancing the sales program in the sales department. It was fairly obvious when we started digging into what WaveTech really was that it was going to be a good fit for our network of investors. One, it's a disruptive technology. Two, it has a very real green element that's not just greenwashing, and the ability to reduce waste in the lead acid battery market and in the battery market in general. It uses an innovative charge model for customers where it's based on their savings. And really, most importantly, is there's high conviction in the product and in the WaveTech team. Otherwise, the current amount invested in it would be a lot lower. And really, finally, the widespread nature of the granted patents that the company has, and that is granted, not just patent pending. We're excited to work with WaveTech, and we hope that you'll consider investing in the company alongside us and alongside the institution.
Well, thank you for taking the time, for having taken the time to hear us out. I would like to welcome you to participate in our journey into the future, which is a journey that will be powered by batteries. Thank you.
Presenting now is Nexus. Nexus is a global behavior modification platform that educates and empowers citizens to take control of their health and well-being. Here to talk further about this opportunity is the founder and CEO, Mona Hayat.
By way of introduction, my name is Mona Hayat, and I'm the CEO and founder of Nexus Digital Technology. I incorporated the company in 2019. This presentation is an insight into Nexus and how it provides a unique model of prevention within the healthcare industry. Nexus is a dynamic global behavioral modification platform with a non-prescriptive approach that enables consumers to define their own wellness. Consumers can access health and well-being tools, services, and education all in one place. This system benefits the consumer, employer, healthcare services, and health insurance companies alike. The mission of Nexus is to prove that challenges that the global healthcare system are currently facing and struggling with for decades are happening at a very high cost, and digital advancement, real-time information, and a focus on prevention is very much needed. I've worked in the healthcare industry for the last 25 years. In different roles, as a clinician, as a fellow, as a C-suite director, and as a commissioner of services. If there's one factor I've learned in this time, it's that the prevention agenda needs to be given much more priority. Currently, we spend more money to treat people who are already ill. This, of course, makes sense. However, it is a significant burden on our healthcare system as we continue to firefight managing patients who are living with long-term conditions. We knew that diabetes, obesity, heart disease, lung disease, and cancer accounted for over 50% of the global healthcare spend at the end of 2020, yet all conditions could be addressed proactively. We also know that 50% of an individual's health is driven by lifestyle. Yet we continue to fund people who are already ill rather than reducing the incidence of illness. We know that obesity-related illness will cost $1.2 trillion per year. This is per year by 2025. And this is according to very reliable statistics put together by the World Obesity Federation. Our talented worldwide medical teams are doing an incredible job of providing reactive care, which would be okay if it were a minor subset of overall healthcare delivery. However, the vast majority of healthcare delivery is reactive. Nexus believes that the scales are tipped the wrong way. In the absence of a wider program of proactive wellness, not only are we wasting investment, but we're not realizing the significant global savings that could be achieved and redirected into future groundbreaking research and healthcare development. To achieve the significant gains needed around the world, individuals need to be properly empowered to make their own well-being choices. This means that they must be given the ability to participate, make active decisions, and receive incentives for adopting a healthier lifestyle. Prevention needs to be focused as much on young people as the elderly to educate our future aging generations to take control of their health and well-being. Ultimately, Nexus provides a critical prevention solution. We connect individuals and organizations through data. Data informs consumers about their lifestyle and assists the organization that provides and pays for the care for those consumers. Nexus provides actionable data for employers, researchers, healthcare providers, government authorities, and healthcare insurers. How does it work for each vertical? In the context of healthcare, we place patient-facing business and clinical processes on the platform. This makes services deliver better, and reconciliation with funders is more efficient. In the context of employers, we place corporate employee benefit and retention schemes on the platform. The offers which employers wish to make to their staff are available via Nexus. We report on the employer back to the employer on key metrics against the plan. Nexus delivers a provider-agnostic option to employers for employee well-being, combined with behavioural and motivational insights, which are monetised. In the context of consumers, consumers use the platform to discover their well-being situation, set goals, and review their progress. Support is offered in the context of health coaches, telemental health provision. Consumers enter data about themselves and consent to data acquisition from wearables. So, why Nexus? Our experience of other health and wellbeing apps in the market is that they are prescriptive. They tell consumers they must walk 10,000 steps a day, sleep 7 to 8 hours a night, and eat clean. We don't tell individuals what good looks like, because any steps towards well-being and health optimization should be encouraged and celebrated. This is what makes us more acceptable to a wider population of people. Current competitors tend to offer off-the-shelf applications that are targeted at consumers already interested in health and well-being. Our platform will account in variation in literacy, language diversity, voice activation capabilities, alerts set around religious practice, etc. It is very much a personalized approach. We've undertaken extensive research into behavioral science, reflecting what people want to see, and aim to be a partner and coach offering the widest possible view on well-being. Nexus has been formed to drive improvement in health and well-being for multiple verticals based on data. We don't tell individuals what good looks like, and that's the key to our USP. Current products in the market are very much targeted towards people like me. The whole point of offering our model to a wider market is that the people who often need health and well-being support are the ones that are not going onto the Apple Store or Google Play to access these kinds of apps. Many current competitors make assumptions regarding the potential consumers' lifestyles, that they have a network of support, that they have sufficient financial means, or even the capability to participate. The Nexus product fundamentally is underpinned by the belief that consumers are more likely to engage in and retain interest in a health and wellbeing product that is personalized to them as an individual. Traction and growth. So we have currently mobilized our pilot with Guy's and St Thomas's Hospital here in London, which I'll talk about a little bit more in a moment. Having completed phase one of our technology build, our strategy for post-money growth is to build phase two of our technology, which we're aiming to do as soon as possible. We want to commence the execution of our marketing strategy, which we have already designed and written. And also, we want to progress our UAE partnership development. Quarter three of 21-22, we want to ensure that we have completed our evaluation strategy. It's important to us to make sure we have a very robust evaluation framework right from the onset. We'll also be executing our communications and PR strategy, and hopefully at that stage, signing off our UAE commercial contracts. Nexus intends to have a subsidiary element of the company based in Dubai. This is because we have a number of contacts and a lot of business development opportunities in both the B2B and B2H spaces. By quarter four, we'd like to make sure that we have in place our APIs to third parties. This includes Apple. Our phase two of our MPV will be completed and phase one of our B2H scaling within the UK. And finally, in quarter one of 22-23, we'll be looking at our B2B product launch. I'd like to give you a very brief insight into our pilot contract with Guy's and St Thomas's Hospital Foundation Trust here in London. The pilot is running for 12 months with an ongoing contract for a further 4 years. This timeframe was deliberately set to allow us enough time for longitudinal outcomes. As you can see, this is our management team and board. For the development of this model, Nexus has been voted amongst the top 100 startups in the world 2020 by the World Business Angels Forum. And as CEO and founder of Nexus, it was a privilege to be recognized by the International Forum for Advancements in Healthcare as a top 100 global healthcare leader 2019, as well as a finalist for this year's Women in Trade Award. Supporting me, we have built a compelling team of experts in the healthcare, technology, and behavioural management fields. Our advisors include major players in the UK and UAE, well-versed in international digital healthcare. Nexus is seeking £1 million of investment. We're seeking to partner with a number of UK and UAE-based companies and authorities to enhance well-being within both regions. As we look to the performance of our competitors, our ambition is to achieve a market share of 1 million consumers over the course of 5 years. We're privileged to be spending some quality time within Dubai, coming up shortly next month to explore business development opportunities across the region and Saudi Arabia, backed by the Kingdom of Bahrain Royal Family Office. I myself are the healthcare advisor to the Kingdom of Bahrain Royal Family Office. And through my partnership with the Family Office, this has enabled us to build business development traction as soon as possible. So as you can see, our pilot with Guy's and St Thomas's Hospital, partnership with the Kingdom of Bahrain, selection as part of the Microsoft for Startup program, and multi-award-winning leaders means this is an incredibly exciting time to be investing in Nexus. Thank you for listening.
Presenting now is Plain Characters. Plain Characters Productions is an independent animation, app development and publishing company. Here to talk further about this opportunity is the Creative Director, Rob Johnson, and the COO, Mike Midgen.
Hi, my name is Mike Midgen. I'm the COO of Plain Characters Productions Limited, and with my co-founder, Rob Johnson, we've created a unique journey to take children to help educate them about the cultures and diversity that exist in the world. Welcome to the presentation.
Let's Go See is a series that we've created off the back of a successful range of children's books that follow the travels of Pilot Ollie and Pilot Polly around the world. This is your chance to get on board a business that's ready to take off. You can invest in a growing preschool and early years ed tech business. We've already established a global distribution and reach, and based on that existing literacy IP, which we've researched and tested, we're now launching Let's Go See into the animation and app world. We've employed a world-class team of creators and producers, tech developers, and educationalists. And together we're delivering engaging content aligned to international school syllabi. Our current funding round is EIS approved for UK investors, and we're looking for minimum investments of £20,000 UK.
Why do we have the solution? Why Plain Characters Productions and the Let's Go See brand? We feel that educating and exciting young children with the diversity and cultures and wonders of the world has never been so vital. In current times of turmoil and global pandemics, now is it even better time than ever. We believe that children who are stimulated and curious about the people and places of our world will grow up to become some of its greatest citizens. Let's Go See can help make that happen. Imagine your child, your grandchild, your nieces and nephews having access to the wonders of the world without ever leaving home. It will give them a much greater understanding of the diversity that exists in the world today.
So who are we? So we are Plain Characters Productions, and we produce the content, Let's Go See, that engages with children around the world and shares cultural and diverse stories, and using the latest mobile technology, world-class entertainment, and state-of-the-art education material. Our business is driven by some core values, and as well as educating and entertaining and inspiring children, we are keen to share the values of inclusion, kindness, respect, and equal opportunity. Following our successful phase 1 SEIS investment, in which we raised 194,000, we are now seeking a second round of investment of 500,000 to secure a rapid increase in the reach and revenue, and delivering a 15-fold increase in business value over the next 5 years. So what markets are we going to launch Let's Go See into? Well, Let's Go See actually fits beautifully into 4 major global growth markets. The education tech, or the ed tech market, its size in 2020 was just about $90 billion and is forecast to grow at about 20% between now and 2028. And licensing and merchandising is a huge market, currently based at about $290 billion, and again forecast to grow between 2 and 3% between now and 2027. The animation market size in 2020 was worth 261 billion, and again is forecast to grow at 6% between now and 2025. Our final growth market is the mobile apps. So mobile phones are becoming more accessible worldwide, and the market is increasing accordingly. In 2019, it was valued at 154 billion, with a forecast growth of 11.5% between now and 2027. So those are our 4 main routes to market. Within the company, we have our own YouTube channel and have our negotiating broadcast deals with global broadcasters. We also have social media channels. We have an Apple and a Google store reference with our app. We've engaged with licensing partners, and we're doing, most importantly, we engage with schools and preschools, providing them with educational material to share with the children. Our target audience of the animations and the apps are designed for children between the ages of 4 and 8. In the UK, that's the key stage 1 syllabus age. And of course, our marketing is aimed at the parents and grandparents of those children. So where have we got to since we started? So in the last year, we've been building a solid foundation for the Let's Go See brand. We were founded in 2020, and already our brand includes an animated series, an award-winning augmented reality app, some consumer merchandise based on our logos, and a books series that ties in with the original Pilot Ollie and Pilot Polly book series. The animated programming have been produced and researched and are released on our own YouTube channel right now. They feature Pilot Polly and Pilot Ollie, and of course the Junior Jets. Our educational apps, which as I mentioned, have won awards, are available in Google and Apple. And we're seeing increasing sales. And as we add to the augmented reality part of the app, the augmented reality part of the app lets us transport children around the world and help them understand about the people and the places. Merchandise and licensing, we have our own shop and are currently talking to merchandise companies about an extensive range of toys, apparel, gadgets, and gifts. And finally, and probably most importantly, is our in-school program. We have produced our first schools pack, which we have now sent out to primary schools in the UK. And the pack contains everything the school needs to produce a Let's Go See stage show stroke musical. So meet the crew. So my name is Rob Johnson. I'm the creative director, and I started the company with Mike and Midgen. We've taken a lot of time to ensure that we've worked with the right people. We've got a very strong team around us, including award-winning writers and animators. We've taken advice from experts in the industry, and such as Dr. Amanda Gummer, who is a child psychologist. And we've also taken business advice from our non-exec investors. So where's this journey together going to take us? Well, we are forecasting profit within 2 years using our multiple sale channels, and having that multiple revenue source reduces the risk for investors. We managed our cost base to a very low base, and we have a guaranteed delivery schedule. Overall, we're offering a 15-fold increase in the business value over the next 5 years. What we're currently asking for is an investment of £500,000, which in the UK is underwritten by the EIS scheme. That £500,000 would buy 10% of the business, and we're asking please for minimum investments of £20,000.
How will we succeed? What is the journey to our success? We will produce or continue to produce educational and entertaining animated stories that will engage children worldwide in a unique way. We will control, manage and optimize our own Let's Go See broadcast channels. We will convert those viewers into app downloads, app purchases and ongoing subscriptions. This will be driven through global digital marketing, influencer and social media channels. We will maintain a very close control on our costs with minimal cost by amortizing content across the app and the animation. We are partnering with best in class to deliver licensed merchandise and in-school sales. And we will continue to spread the word by engaging educationalists and child psychologists to ensure that our content continues to deliver quality education and remains true to our corporate values of educating, entertaining and inspiring children around the world that we share. As a final thought, this is a unique opportunity to help improve the lives of children, of millions of children across the world, educating and enthralling them in the people, places and cultures of the world, and helping them develop values of inclusion, respect, kindness and opportunity. We will help children develop the vital life skills of literacy and communication, whilst also delivering a great opportunity to invest in a business that has proven products, strong demand and high returns.
If you'd like to see some of our material, the links on this slide will lead you to our Let's Go See.world website, our dedicated YouTube channel, and there are links to download our app through the Apple and Android stores. It's a free app to download. If you'd like to speak to us, if you have any questions, then please use the contact details below. Thank you for listening to the Playing Characters Productions Limited pitch for Let's Go See, and hopefully we'll speak to you soon.
Our panel session today, titled Venture Investment in a Post-COVID World, includes Paulina Bialek, Business Development Director at Expara VIR Tech Global Accelerator, Paul Webster, Managing Director and CEO at International Investment Services, Olga Afanasieva, Head of the Kiev branch at Elix, and John Verzele, Director of Inward Investment at Flanders Investment and Trade. Today they'll be talking about expanding European startups to international markets, pre-seed and seed funding in Europe acceleration programs, and the impact of COVID on founders.
Hi everyone, welcome back to the UK Technology Investor Showcase. We're today presenting you with an overview of the European landscape, and we've got a wonderful selection of guests with us, covering from the far east of the European network, Central Eastern European network, into Western Northern Europe. And we also want to try and capture what's happening in the entire EU and UK market. So we're going to have a really interesting conversation over the next 40 to 60 minutes. We'll be on live to take questions with you at the end of this. But for now, an introduction of myself. My name is Paul Webster. I am the founder and managing director of International Investment Service. We provide support to we've supported over 3,000 businesses to enter the UK and European markets. And what we do is share real-time support in businesses getting set up. But what that means is we get to work with great people like the hosts, the guests we have with me today, or presenting as hosts of their own region of the market that we're covering in Europe today. And just before I introduce them, I want to provide everyone with a reminder of just how big and wonderful Europe is. Many of you will be watching Euros 2020, a year in delay, like many of the things we're seeing. And as the football is exciting to the rest of us in Europe, it's a reminder to the rest of the world, from Russia, the Ukraine, Poland, Belgium, Netherlands, Spain, Portugal. We're seeing dynamic activity across the field, and you never know where you're going to find the next exciting project and who that amazing striker is who's going to set it up. So whilst you're watching the Euros and we're moving through the knockout rounds and the finals, I'm hoping you'll enjoy the breadth of excitement across Europe, and that you will take learnings from today to expand your view of the opportunities from finding interesting investments, but also working with the venture capital scenes across the entire European market. So for those in the Southern Hemisphere, London to Moscow is the size of flying across Sydney. To put that in perspective, you haven't even got across the rest of Russia. You've got to do another 5-hour flight. The market is huge. It covers Turkey, Poland. It takes us down into the boot of Italy. It goes into the deep tech of Israel and brings us back up the Atlantic coast through Portugal and Ireland into the UK and back into the Nordics. So come with us on this journey as we explore these markets, and I hope you'll find it very interesting. I am delighted to introduce our three guests. To begin with, I'm going to ask each of our guests to introduce themselves, tell us about themselves and their role, and what was their best project that they've come across in their working life, and working either as investors or founders or supporting businesses in their region. So firstly, I'm going to introduce Olga, who is head of the Kiev branch and was formerly the CEO of the Ukrainian Venture Capital and Private Equity Association. Olga.
Thank you, Paul. Hi, everyone. Indeed, my name is Olga, and recently I have shifted to the role of the head of Kyiv branch at the big IT company called Alex. Is the company with 30-year-old history, with around 2,000 people across the globe. And actually, this is one of the trends on the technology market, is that tech companies are expanding, like finding more and more employees and managers outside of their home country. In our case, is Ukraine, as well as we're having like customers from Western world, mostly from like companies of 500 Fortune. Before that, for the last 7 years, I was working in the venture capital industry as the CEO of Ukrainian Venture Capital and Private Equity Association, almost from the beginning, like at the very beginning of origination of this organization, where we were developing and are developing the Ukrainian investment market, connecting investors, bringing more entrepreneurs and venture capital, private equity funds, and limited partners to our country and to the region. At the beginning of this year, I decided to, to shift from operational role to non-executive, and I'm staying as the co-chair of research committee. Among like the big projects that may be known are the Ukrainian House in Davos during the World Economic Forum, which we have been organizing for the last 4 years before COVID. Of course, now is like all digital, and we're in the waiting mode, let's say, like that. And also like one of the flagship projects, but focus not on the investors but more entrepreneurs, which I am fascinated about, is the Ukrainian representation of startups at CES, Consumer Electronics Show, the big tech conference in Las Vegas. So also before COVID, during the last 5 years, I, accumulated the group of investors who were selecting the hardware startups and bringing them to United States of America, also showing the opportunities of Silicon Valley and so on. And this is one of the, the projects for the soul, I would say, which also pays off for the market. And we see great successes of further fundraising of the companies, entering Y Combinator, and that's it. So briefly it's like that. So basically I combine the experience of venture capital industry and purely technological sector. And happy to share my experience.
Hello, Olga. From World Economic Forum to CES in the West Coast of America. John.
I was quite a traveler.
And in very interesting projects too. John, Flanders, and for many of our audience, can you describe Flanders for us and help them? As I have to admit, I had to be educated on what the definition of Flanders was, but what I can say is once I was educated and did a tour of the region, I was blown away by how much activity there was going on.
Yes, thank you very much indeed. I'm John, and I represent the Flanders region. So hello, everyone. Our Flanders capital is Brussels, as is the capital of Belgium and the capital of Europe. So we're located right in the very heart of Europe. Flanders is the northern part of Belgium, and it's, of course, an excellent location if you look at the map, because we are right in between the bigger countries, France, Germany, the Netherlands, and just across the channel is the UK, of course. So very close to those markets. Excellent location, of course, if you want to operate in that part of Europe. And we combine lots of things. It's a small place. Belgium is a small place. The northern part of Belgium, Flanders, is the economic engine of the country, with, for instance, also the port of Antwerp, which is the second biggest port in Europe, just behind Rotterdam. Strongholds are our ecosystems. It's a very dense region with lots of expertise and lots of evolution in R&D and technology that is going on. We are in Europe, if you rate it, we have the 5th most R&D projects of the whole of Europe, and strong ecosystems. We focus a lot on what we call climate tech, with the Green Deal in Europe. Of course, there's a boost in everything that's going on in clean tech. We have lots of attention for digitech, with, for instance, a very renowned research institute like IMEC. And the third thing we are focusing on a lot is the health tech, of course. We have a thriving pharma and biotech sector. For instance, to give an example, Pfizer is producing the vaccines, COVID-19 vaccines, right in Flanders at their manufacturing site in Flanders. So that's a strong combination, and we are focusing a lot in the crossovers also between those sectors, which we think is the future. Now, personally, I'm involved in the investment work for Flanders Investment and Trade for attract new investments into our region since about 20 years, so a long time already. Before I was CEO of a smaller company, basically a service provider for the organization of all kinds of international congresses and so on. And before that, I was managing director of the Chamber of Commerce in one of the cities in Flanders. So I have a view on a regional side a lot, and also the international dimension. Now, if we look at important projects that we were involved with, or me personally, we in Flanders have lots of big investments in the chemicals, with big chemical cluster around the port of Antwerp, but also in this health tech sector. And the most recent one, and very important one, which has been announced, is a recent one, a big investment in new technology of CAR-T technology, which is a cell therapeutics technology to cure blood cancer. And that's a new project going on in Flanders, in the city of Ghent, with R&D and production facilities driven by Johnson & Johnson and also Legend, which is a company associated with J&J. So lots of things happening, and we see some optimism clearly about COVID-19 recovery. We can talk about it later, of course, but we see that boosts certainly short-term investment plans. That's what we see today.
Brilliant. So a very great location with a great understanding of the surround and the heart of Europe, with a very diverse range of activity occurring. And finally, I get to introduce Paulina. Paulina.
Thank you very much, Paul, and many thanks to the organizers for the invitation. It's my pleasure to be here today. My name is Paulina Białek. I'm Business Development Director of Expara. Expara is a venture capital fund. We are headquartered in Singapore with offices across Southeast Asian region, in Malaysia, Philippines, Thailand, and Vietnam. Since 2018, we are also present in Central and Eastern Europe. We launched our office in Warsaw, Poland, and we are covering the whole region of CE, looking for startups interested, especially the ones interested in expansion to Southeast Asian market, because we've been there for the last 20 years. We already have 5 venture capital funds. We invested in 90 companies altogether. Except for our investment experience, we are also accelerator provider. We accelerated altogether more than 10,000 entrepreneurs from all around the world, and we cooperated with different companies like Singapore, like Microsoft for startups. We cooperate with Singapore government, with Thai government, but also Singapore banks and many other corporates, governments, governmental and non-governmental organizations, and so on. When it comes to the most interesting project that I had the pleasure to take part in, and very much in topic of this today's conversation, was the Expara BioSelf Global Accelerator. This was the acceleration program that we launched 1 year ago, just after COVID. And this program was dedicated for startups developing solutions for post-pandemic world. We had hundreds of applications from the whole world. We selected 15 startups, and they were not only from Asia, but some of them were from Europe, from Israel, from the US, from Chile. So very big and global digital program that we had a pleasure to deliver. And also we gathered more than 120 different partners from the whole world and mentors that were helping those startups. I'm very happy to see those solutions already on the market and helping to address the challenges brought by the COVID-19. Yes, so thank you very much, and I'm very much looking for the discussion today.
Thank you, Paulina. I mean, amazing in the sense, working for the Asian businesses, working Asian capital to take global opportunities from Europe back into Asia, and to see their success and to help 10,000 entrepreneurs through the accelerator program. You must have a very busy schedule going on. And also touching on Warsaw. And I think for a lot of us, we've seen a real shift in the activity from Poland within it and from it to globalize. I think it seems to be a very natural attitude of Polish entrepreneurs to want to expand rapidly into international borders. Could I ask you to describe both the startup landscape and the investment VC landscape in Poland and the broader region?
Sure. So when it comes to VC landscape, it's very robust for the last few years. That's because of the Polish Fund for Development that we have here, which is financed by the European Union. And due to those activities of the EU, we have more and more VC funds who are public-private venture capital funds investing in the region, especially focused on Poland. But I also have the mandate to invest a bit outside of the region, but with the Polish, with the Polish component. So altogether, we have around 100 venture capital funds. Those are usually pre-seed or seed stage. We do not have many Series A or Series B venture capital funds. For those money, startups have to expand especially to Western Europe, or some of the companies go to the US. Natural direction, not to Asia. Not many companies going to Asia yet. So when it comes to VC ecosystem, it's developing very fast. When it comes to startup ecosystem, it's also developing. We have lots of activities from the universities in Poland. So they are launching their own incubators. They are trying to incubate startups. Altogether, we have around 4,000 startups in Poland. But it's definitely, there are many accelerators, more and more incubators, and I think that this is going to develop for the next couple of years, definitely. And this is also due to the money that we have on the market. It's pretty easy to be funded, especially at pre-seed or seed stage.
I mean, and from my experience, a lot of the entrepreneurs, it's the pre-seed seed is the most critical, because Series A and beyond, as you say, the global funds begin to open up. If I'm an entrepreneur, should I be looking at Warsaw or Krakow or one of the other regional cities, or is it all about Warsaw? What would your recommendation be?
Okay, so I wouldn't say that it's only about Warsaw. So we have some venture capital funds that are located, other cities like Krakow, Poznań, Wrocław. We have it, but like 70% are still headquartered in Warsaw. But it doesn't matter if you are from Warsaw or another city. Still, you can get funding from all those venture capital funds. They are investing in the whole Poland. So.
No, brilliant. And John, can you describe the Flanders scene for me, please?
Yes, well, it's also indeed a little bit like in Poland, pre-seed and seed stage. Also, we have a rise in interest and VC funds and possibilities there that we see. We also have from the government a PMV, which also gives a lot of possibilities to participate and see what the possibilities are. Now, we focus a lot on accelerating programs and also building the pipeline and giving to international startups and scale-ups the possibilities to get them introduced into this European market, giving them a specific launch pad by introducing them to the networks and building those customers and so on. That's very important. So we have dedicated programs, and what we do, lots of incubators and accelerators are specialized in certain technologies. So we are mainly looking for companies that have already in some stage of solution or problem solved. They have a minimum of viable product already, and what is important to see what is their go-to-market strategy. So these are all elements that we take into account. And what we have a little bit in Flanders for the moment is a kind of shattered landscape, and we are building to try and uniform it and build that image also of Flanders towards the startup communities and international startups, that we are a good location where they can find funding, but also this excellent launchpad into the European market. That's where we focus on mainly.
And I guess in that regard, if you're getting the contracts to generate revenue, the need for capital raising is also less. So getting that two-pronged approach of support.
That's right. That's right. Yes.
And as you say, surrounded by the heart of Europe, so a great location to explore the other regions. Olga, can you describe for us the Ukraine market and the VC and the entrepreneurs? I mean, the entrepreneurs we know incredibly dynamic, but the VC market, I believe many of us will be really intrigued to see how active it is.
Yeah, sure, Paul. So as I assume that our audience predominantly international, and so I will start, like from the beginning, from the basics on what is Ukrainian innovation and venture capital ecosystem is. The specifics of our region, comparing to other European countries, comparing to United States of America with the Silicon Valley as the heart of the innovations. So the big difference is that all the venture capital activity, all the entrepreneurial activity and the boost was initiated not because of the support of, like state authorities, like government or things like that, but actually despite of that. So all the during almost all the history of like 10 years of emerging startups here appearing business angels and venture capital funds, these are purely, like civil society activity without any support of the government. And this what like defines the Ukrainian innovative ecosystem. And it's very important to understand like why we're moving in that way, like slow or not slow, we will judge later. And so in terms of amount of the investments that were attracted by the startups, by the technology startups, originated in Ukraine. So far during the last, I think like 8 or 7 years, there were $2 billion venture capital dollars invested into the American dollars, invested in the companies which were originated by Ukrainians or with a huge representation in our country in particular. Like usually it's R&D and the team can be across the world. Like the typical model is when the headquarters or the management team is located in the United States of America, because the majority of startups are piloted on the biggest market, which is US, but not in Ukraine, because Ukrainian market, of course, is small. There are less early adopters, and Ukrainian startups try to build the global companies from the day one. This is, I think, like 90-something% of cases. So this is what is like the basic conditions of what is Ukrainian venture capital in innovation market is. And in terms of funding and the influence of COVID, that's also very interesting, because when COVID just started, like March, April, my colleague and me, we decided to launch the series of video podcasts, talking to venture capitalists from all over the world to understand how does the industry changing, like how do they provide capital, how do they look into the startup, because actually venture capitals are paid for this. Yeah, it's not like the free time freelance activity. And what we saw is that like of course during the first couple of months, like April, May of 2020, there was certain not like misunderstanding like what to do, like how to behave now. But after that, they adapted very fast, both like startups and the investor side. And actually COVID impacted in a positive way, because like previously there was a bias in Silicon Valley, for example, that you need to leave like 20 minutes drive the most distant your portfolio startup should be like 20 minutes drive and not more. And now, like, you cannot even drive to the neighboring house. You cannot meet those portfolio companies or possible startups to invest in. So basically, there is no huge difference where the founders are located. The most important thing is like the product, the team, understanding the market, sales, like all these classical things. So I think that impacted well, in particular, Ukrainian market. And we see the increase of venture capital investments and private equity investments into the companies originated here, as well as one of the key features of the previous year landscape in venture capital industry was the growing amount of exits. So we actually had the record number of deals, also like most with moderate exit value. And this is also a very good sign. The other thing is, the other like trend that we were spying is that despite of pandemics, despite of COVID-19 outbreak, the M&A activity remained strong as well. And here we're talking not only about the M&A among startups, but as well as among IT companies. So some of them were acquired by bigger ones. They were certain like highlight deals with Ukrainian and Polish companies actually. And the technology market is overheated, definitely. Like, for example, in Alex, the company where I'm working currently, during the pandemic year, we grew up in Kyiv for 100 people, and we did not fire them. So it's a huge growth. It's basically we were 100 or something people at the beginning of pandemics. Now we're more than 230 here in Kyiv office, and this is huge. And tech companies continue hiring, and now they hire even more actively abroad, like expanding their representation not only in Ukraine and the region, but in on American continent and so on. So I think I'd like to highlight these issues and would be happy to elaborate on other things as well. Thanks.
You touch on exits, which is a very interesting element because, let's face it, that's why investors make the investment in the founders and the businesses. And it's either through progression and exiting in a funding round or a trade sale and M&A. From the UK market, everything you've just touched on, we have seen the M&A volumes higher than 2014-15, which was the last peak. We're seeing more companies who may have been listed being taken private. We're seeing more mergers of technology coming together, and the bigger firms, well-funded, are acquiring quite aggressively really interesting tech. So we're almost rewinding the clocks a few years back in that activity. I guess for the team, and one probably differentiation I see in the UK, French, German market is there's probably a lot of Series B, C, D. And when we look at the value of investment, I think why they stand out with such big numbers is this: the Series B, Series C, Series D are such large numbers, you see the table get skewed to the value. When we look at the volume and the pre-seed seed, does it really differentiate? I mean, are we seeing several hundred deals done a year across your regions? Is that the kind of activity? If I could get a guesstimate on the activity you see in your region for pre-seed seed. Olga, I'll go back to you and then to Paulina and John. Olga?
Yeah, the majority of deals are, I would say, on the seed stage. There are, during the last couple of years, we see more and more deals on round A, but I would not say that this is like, yes, now we have a lot of round A deals. No, that's not the case. But, well, in Ukraine, there are two unicorns originated here, out of here. This is GitLab, the open source platform for developers, and also Grammarly, the spell checking service based on artificial intelligence. and machine learning. So I think this let's call them success stories. They attract more and more attention to the country and to the region in general. But still, we're lacking investments on the and we're lacking actually companies on the later stages like round B, round C, and definitely. Well, actually, the peculiarity of the venture capital market here is that the majority of investments are coming like in amount measurement. They're coming from United States of America, and since recently, I think from Europe, because in particular Poland, Baltic countries, they are looking much more thoroughly because of the governmental support into the companies from Ukraine. Yeah, but still we need more capital on the pre-seed and on the later stages.
Paulina? And particularly any insights you have in the comparison between Asia and what you see across Poland?
Yeah, so actually the first comparison, maybe I can just follow up on what Olga said before. She mentioned that Ukrainian companies think global from day one. So this is not something that we can observe here in Poland. Definitely not. People think that, like 30 million, almost 30 million people market is pretty big. And so we have this pre-seed and seed stage funding available. So companies definitely do not think global yet. And this is something different than Singapore. In Singapore, it's less than 6 million people there. So companies have to think global from day one. They think about Thailand, they think about Vietnam, about Indonesia, about expansion, and they are expanding very quickly. When it comes to funding, so those are hundreds. We had more than 300 deals, VC investments in Poland last year, but 62% of them were based on public-private capital. So those are those public-private venture capital funds that I mentioned. When it comes to Series A, we had 26 deals, Series B only six altogether. And the change in investment is when it comes to the sectors. So a lot of money was spent on healthcare. So this is not something that we observed before. Like 2020 was definitely the year for healthcare industry.
Yeah, it's an interesting one because I work with probably 20 plus Polish businesses a year looking to expand. And I think it might be some of those stats like the Polish born businesses where they raise international. So because I think the pre-seed seed is great to get the business up and proven. And what we tend to see is a lot of Polish businesses look to the larger market to do that Series A, Series B. And perhaps that's one of the reasons the Series A, Series B numbers are a bit lighter. But actually the pre-seed seed is so important to the entrepreneur that actually it also shows it's a great ecosystem. And for investors, where you will find great innovation that is funded at that early stage. John, on Flanders.
Yes, well, what we see, indeed, we also see a lot of activity in mergers and acquisitions, really boost there this year. We see lots of activities, more than before, that's for sure. Now, Belgian startups, scale-ups, they are born globals as well. So they are looking for the opportunities because, okay, Belgium, Flanders and so on is a small market. So they immediately look abroad. Most of the funding pre-seed, seed. The other rounds are still more difficult, but we see a growth, and the biggest investors in the Flanders regions are the Americans, US investment, biggest one, and that's followed by the neighboring countries, which is not unusual, of course, how we have our markets around us. The Netherlands, France, and Germany are in the top 5, and from Asia we see the top projects from Asia coming are from China and Japan. China has taken over from Japan. Japan used to be the biggest Asian investor. That's not the case anymore. Nowadays we see more and more investment coming from China. Different kind of projects. We see bigger projects at the beginning. These were rather smaller kinds of investments. Nowadays It's a bigger kind of projects, also related more to technology, R&D, and so on. So we see quite a shift there in the profiles as well. If we look at foreign direct investment, and the driving sectors are the health tech is a big one, and more so everything that has to do with the clean technologies as well.
And on the technologies and the sectors, let's stay on that theme. And I guess what is driving the activity? I mean, 2020, I'm going to ban you from saying health tech or health sector, because I assume that's going to be worldwide #1 in 2020, 2021. Excluding the healthcare element, what other sectors have you seen really gain traction in the last 12 months in your region? John, staying with you.
Yeah, well, traction, of course, everything that has to do, we are, as said, in the middle of Europe. Logistics and transport is very important to us, and we had a boost in everything that was related to e-commerce activities. Of course, people staying at home, shops closed, and so on. So we see a shift there, of course, in virtual shopping and everything that has to do with it. We see also companies adapting to those business models, because we're speaking about new business models in the experience of shopping and the way products are presented. We ourselves, for instance, with Flanders Investment and Trade, to reach out to potential investors, we started with virtual tech tours. The first one we launched was for the life sciences. We're now working on Digitech tour. So we give an immersive experience to potential investors to showcase our region. But we see the same thing happening with companies, that they reach out to customers in a new way, and they need more support, innovative tech support in order to do so. So that we see, and the boost in the e-commerce means also that it was a boost for logistics and logistic companies as well. That's what we see. So that was a big growth sector, lots of investments in also in warehousing and optimization of the logistics supply chains, everything that has to do with everything that comes with it. And it was even intensified for the Flanders region because of Brexit, because we see a number of companies from the UK also optimizing their supply chains towards the continent. And we saw the consequences certainly also in that landscape in Flanders. So that was a thriving sector there, the e-commerce. And the second one to mention is the one I mentioned already, is clean technology, climate tech. That gives a boost because of the Green Deal also in Europe, of course, that stimulates everything that has to make with the transition, environment, and so on. And that's a focus. You see it as sustainability and so on. It's everywhere throughout what companies are doing nowadays, and they look for new materials. They look for business models that are more sustainable and so on. So that's also something that we see in that field, and that's true for R&D, that's true for manufacturing. So the whole chain, we see the influence there.
You touch on a really exciting element around the e-commerce and infrastructure and the connectivity of Flanders in that element. Last week, the Financial Times put out an article saying how the new e-commerce activity, it was focused on UK, but also focused out on Europe, was approaching 40% during lockdown 2 across the UK. But then actually the warehousing, and initially it was linked to Brexit, but more and so, there's a formula which is effectively warehousing will have to grow threefold to deal with the increase in e-commerce, which they see plateauing at about 40% of retail as we return back to normal. That a lot of patterns have changed. We're seeing 65% of, I believe it's over 60, sorry, a 300% increase in the use of internet shopping by over 65. So the demographics are changing completely. That is shifting supply chains substantially. And I was really shocked to see that for every marginal increase in e-commerce, you need a 3-unit change in logistics and warehousing. So if you're in that sector as an entrepreneur, really exciting times across Europe.
It is, yeah, indeed, yeah.
Paulina, what sectors are you seeing? And again, you've got a global view, so please, if it's not just in Poland, but it'd be great to see particularly what you're seeing out of Poland as well.
Okay, so definitely I agree with logistics and warehousing, but I would like to add smart building solutions, like, for example, booking desk. So all those desk booking applications, platforms, office management, another one. Also food delivery. So it was, as we said, like it was growing very fast, but also I see delivery of groceries, including waste management trends. So it's going into sustainability direction and addressing those trends that are very, popular in the US, and I see them also coming to Poland. Another sector is edutech. It was already a crowded space, but I still see some startups appearing on the market. My favorite actually are impact startups addressing global challenges. And I see many startups in food tech, agri-tech, clean tech, ocean tech, also many venture capital funds. Big brands like, for example, Amazon, they also have their own sustainability fund, and Google is working on it. So there is lots of money on the market now. And I think that this is time for those solutions like agri-food tech, clean tech, ocean tech. And also we as Expara are launching our new venture capital fund that will be focused on those sectors. We see that this is time for this now.
So yeah, again, logistics and that sustainability in a broader sense. It is. I mean, you look, we've got COP26 in Glasgow later this year, and I think that's going to be a real strong messaging. Following the G7 earlier this month, I think we're going to be ready for a really large push by the international government. So the companies pointing in that direction, I think it's certainly a trend we're seeing here in the UK as well. There's a lot of space opening up for it because the value chains, to John's point, are requiring to adapt as well. So definitely exciting times across Europe there. Olga, in the Ukraine, what are we seeing?
Well, in general, I would say that the trends of Ukrainian founders and what IT companies do are pretty much the same as the global trends, obviously. Like on the high level, I'd name software development, and then if we go if we're deep diving, these are different subsectors. For example, solutions to increase the productivity, solutions to increase the sales for big companies, for corporations. Like, for example, I'd like to name companies as People AI is so-called Soonicorn, like soon to be a unicorn, which is a very interesting company with a great story. I'd like to stress it in particular. We also have a good case of hardware development for security in the homes as well as the offices and everywhere, like company called Ajax. They recently put their devices in Antarctica. So also a very interesting case. The other industry is definitely fintech. In particular, everything related to blockchain. Like recently, Ukraine was in top 3, I think, countries by the incomes from the activities with the cryptocurrencies, and this is something which is very, very hot over here, as well as other solutions like neobanks. We have the case of Monobank and its subsidiary, which is developing in the United Kingdom currently. Of course, it's e-commerce. Yeah, we were all stuck home and we needed the food to be delivered to us, medicine to be delivered. So there were really good cases of the companies that were launched, like in the format of Cloud Kitchen, in summer last year, and now is really a big company that is having a proposal from Polish magnates to be acquired. and from Ukrainian investors to be invested from, but they still, want to be independent and develop their own business. Another unexpected sector is related to fashion and sustainability, like let's call it fashion tech. We have the company, for example, called DressX, which is like the virtual clothing if you want, to show up on Instagram or on your pictures with some fancy designer dresses. You can, just order it, and using the artificial intelligence, the application, the service will, change your appearance as much as you wanted. And, work hard, play hard. So talking about the trends, I cannot not mention the company, which is called Reface, which is also a very interesting case. Probably, I think many of you have heard about it or have been using it. So if you ever wanted to try yourself in the movie with, Angelina Jolie or, Kevin Costner or whatever, whoever it is, you can just, upload your picture, make a selfie, and your face would be inserted in the short video from the movie or from the video or from the football match, which is also hot these days, as I'm in Italy in particular currently. So yeah, it's a very interesting case. They raised investments from top tier investors, venture capitalists like Andreessen Horowitz, and the range of business angels, celebrities, and a lot of influencers have been, promoting this app. So yeah, this is pretty much the same. So first, we are working hard with productivity boosting applications, and then we're playing hard.
Yeah, and you've got to do both to keep it sustainable for your own mental health and well-being. And one trend I'd say from the UK, certainly everything everyone has mentioned, as well as cybersecurity, is really coming to the fore. Obviously, as we've gone more digital, that's obviously become a very interesting field for investors and entrepreneurs. As we look, I've got one last question I'd like to put to you, and if we rewind the clock a few years, we look at AI today and it's almost embedded in everything, but rewind the clock to 2014 and it was the emerging technology. So since 2015, annual investment in AI has more than increased 5-fold on a per annum basis. Go back to 2014, it's 10-fold increase. What do you see as the next sort of AI? What is that phrase that's just bubbling away under the surface, but actually 5 years from now, 2025, what will we be saying? Wow, that's a really great trend. And then I'll come back to you with your one top tip for entrepreneurs or investors coming into your market. But Olga, what's your 5 years from now? What will be a standard element that we're not really seeing at this point in time?
I think it's still AI, actually, because as much as we talk about AI, it's still far from perfect. We're still not conquered by robots, and we will not be, within the next 5 or something years. So yeah, I would still name that one. And if we're talking not about technologies but about investments, is something that Paulina already mentioned, is impact investing. I believe that within 5-10 years, the regulation from the European Union, from the US, as well as common understanding and common understanding of people will be to have the component of impact while making their venture capital or private equity decisions.
So do good whilst doing good will come more and more to the surface.
Hopefully.
John, to you.
Yes, well, I think it's amazing if you look at it, and it's amazing what's happening in all kinds of sectors and fields. AI is in it, of course, but there are lots of things happening. If you look at food, for instance, within 5 years, what is happening in the food sector, the alternative food production technologies that are developing, for instance, that's something to take into account. That's what we see happening. But I think it's certainly, and it's true for all sectors. We see it in life sciences, but it's true for new materials, chemicals. Amazing what is happening there. But the biggest change that we will see, I think, 5 years from now, is an integration of all those technologies, the crossovers that we see. And that's possible because of the evolution of technology, and it's possible because of all those digital technologies that we have, like the big data. It's combined with AI, and cybersecurity is obviously a big challenge there if we are talking about autonomous driving, for instance, and so on and so on. But that's what I see. And we see it specifically also in life sciences and the health tech, these combinations. We see more and more progress made in the predictive medicine as well. So that's what we see, that, yeah, it's not only bringing a solution when you're ill, but it's already preventing that you become ill. They already can analyze DNA and so on and so on. So I think those steps will be amazing in the progress that will be made in 5 years from now.
Yeah, and you touch on some incredibly powerful points. I mean, the alternative food parts and making protein available to the world is, in a sustainable way, is phenomenal. Touching on the crossover, we know, for example, the technology moving into edtech and the way that we've been forced to educate has really given us a lot of opportunity. And then the predictive medicine, it will also lead to a lot of ethical questions. What do we do, not do with that knowledge we have about individuals? But again, we're seeing, I think the rush to investment is going to open that up incredibly. And your one tip for accessing Flanders, John, other than, of course, Core John, what is your next best tip for those approaching the Flanders region?
Well, it's excellent, a very dense location. It means that you have close contacts through all those ecosystems. So it's an excellent location to combine the R&D and the technologies that we have in our ecosystems. That's a big advantage that we can offer.
Great. And Paulina, for yourself, what do you see 5 years from now, and your one tip for entering Poland?
Yes, sure. So I think that after a pandemic, people are going to be more conscious what's going on around us. I think that they are going to take care more of the environment, but not only about the environment, about the food that we are eating, about the way that we are living, the way that we are impacting and destroying at the same time our nature, the planet. So I see many those trends are developing. I see them especially in the US, in Asia, but they are also coming to Poland, which is a very good sign. They are in a very in its infancy, but it's happening. When it comes to the tip for the entrepreneurs, so when it comes to the Polish ecosystem, I see lots of companies coming to Poland from abroad. They are coming because here we have pre-seed funding, we have seed funding that I was talking about. But I think that it shouldn't be this way, that you are moving your company to Poland only to get this funding, that you do not have any Polish component. You are not trying to, but you want to register your company in Poland just to get funding. I think that it shouldn't be this way. And my tip for the entrepreneurs is that they should really consider the market they want to operate on, and they shouldn't, look for funding that is available. We have seed funding, we have pre-seed stage funding, but we do not have that much Series A, Series B. So there will be a problem anyway. And I wouldn't go for those reasons. And this is my tip.
But finding talented entrepreneurs for a market with 30 million people to expand your business, definitely worth having a look at. Brilliant. My tip for 5 years from now, I think if they get their head around quantum computing, it is mind-boggling, genuinely mind-boggling, the power that will be unleashed. And then the second one is sustainability within concrete, particularly concrete. 60% of our greenhouse emissions come in from the form of concrete. And it is going to be incredibly powerful if they can reduce the emissions of our construction sector. And I put that out as a challenge to many of the listeners to see if you can make a huge global impact by helping the construction industry to address that number one challenge. My top tip for entering the UK, it's diverse, it's open, but it's a wonderful ecosystem. However, you need to look at all of Europe in its entirety, understand your product, the services you're offering, and where you fit within a very dynamic and very diverse continent. It has got so much to offer in the way of prosperity for investors. It's got so much innovation available to partner with, to find the development teams to let you scale. And I think by casting your vision across to the Ukraine, into Poland, working with the Central Eastern European network countries to ensure that you can prosper there, work with the innovators, work with the development teams, and entering across into the higher wealth Western markets where you will find the Series B, Series C's capital to help you grow globally, you will find those opportunities, and Flanders is a fantastic location. And certainly you'll do well to work with John to access the EU 27 in the north and the west through John. Poland seems to be a great anchor for the EU in the east. And the Ukraine really is in the heart of global market distribution, but from a development team, as I were touched on, with great respect across the markets. And I don't know if many of us thought that our grammar was being checked by a Ukraine unicorn, but there we know they all make us a little bit more improved in our communication style. So that brings us to a close. We hope you find the rest of the conference really interesting, and we look forward to taking any questions you may have to help you guide you through your adventures and investments and entrepreneur journeys across Europe. Thank you.
Thank you for joining us for the UK Technology Investor Showcase. Now from here, what I want you to do is engage with the companies that participated in today. As I mentioned, you can do that via the stream page, or you can do that via the Chris Deal Room. We've set up everything so it's simple for you to access the information you're looking for, or just engage with the CEOs directly. Set up a phone call, contact them on LinkedIn, and start to track the progress of the companies which have been featured today, or directly engage and set up one-to-one conversations with them. As I said, what makes this work is the innovation actually helps build itself. Between the ecosystem and the companies which get featured, that is how we actually grow. So for our next one, what I would love you to do is recommend this to your investor networks that would like to participate, because for us, as I said, how we grow is by you and your participation. And again, a big thank you to the keynote and also to the panel session that participated in today's event. Thank you very much and enjoy your afternoon.